And if you look at the overall domestic demand perspective, as the headline suggests, we have a fairly robust domestic demand. Private consumption share of GDP has risen to the highest level of around 61.4% since all the way going back to FY 2004. So it's the highest in 2 decades. Gross fixed capital formation is nearly 30%. As a percentage of, these are, by the way, as a percentage share of GDP at current prices rather than in constant prices, that you can see on the left side. So, and then we have export of goods and services about 21.2%. Imports are shown as a negative number in the bottom below the zero line. So overall, we can see that private consumption is holding up very well, and capital formation is very steady at around 30%. And in the fourth quarter alone, real GDP growth picked up after the first 2 quarters because of election-related slowdown in expenditure, and both in the public sector and in the private sector. You can see that fourth quarter GDP numbers are at 7.4% year on year compared to the previous final quarter of FY24. And then again, on the right side, you see the comparison between India's growth rate in January to March quarter compared to other countries, and India has again performed better than contemporary economies. In terms of the growth drivers, in it is off-season, so to speak, whereas industry has picked up quite significantly after the first 2 quarters of slowdown. And monetary policy may also have played a part in terms of boosting liquidity and credit conditions. Growth has maintained its overall growth rate throughout the 4 quarters. And as we showed in Q4 in particular, private final consumption expenditure did quite well, and so did, in fact, the big improvement was in the case of capital formation in the fourth quarter. These are also once again as a percentage of current prices rather than constant GDP. We also want to show you, in general, there is a perception that India's growth rate has slowed down after the first 3 years post-COVID, FY 22-24, and FY 25 6.5%. I think it's important to understand that globally it is a growth scarce environment. Some of you may recall that in the annual World Economic Outlook, semi-annual World Economic Outlook, that the IMF, International Monetary Fund, brings out April-October. The April edition came out badly a month ago, and global growth numbers have been revised lower for current calendar year 2025 and 2026. Now, if you look at India's growth differential in real terms, what we show here is that real GDP growth of India, the blue colored bar, real GDP growth of what IMF calls about 30-odd advanced economies, and the difference is the green line that is charted. So now the interesting thing is India's growth in comparison to the average growth rate of advanced economies was on the lower side in the boom era between 2003 and 2010, despite one COVID year in which Indian economy did quite well, even compared, not the COVID year, the global financial crisis year. Even then, the Indian economy did much better than advanced economies. And in 2009, advanced economies suffered a contraction. India's 2009-10 growth rate was actually on the higher side. But the point is, the growth differential in this period, post-COVID, the black line shows you, is higher than the growth differential in the boom era period. In other words, India's performance in a relatively growth scarce environment post-COVID, and in spite of the rising uncertainties due to geopolitical conflicts and trade tensions which predate 2025, I think India is actually holding up its growth numbers better than many advanced economies as well. I think that is something that we need to internalize quite a bit. That is why we put this chart together to show you that it is not the absolute growth numbers alone that matter, but how growth is holding up in an overall growth scarce environment is equally important. In the economy itself, as we now move into 25, 26, how are things holding up? Because we are now 2 months into the new financial year. Actually, what is interesting to note is that both manufacturing and services, the purchasing managers indices on your top left, they are firmly in the expansionary zone. Then you look at the e-way bill generation, picked up year-on-year growth rate, actually improved to 23.4% compared to 20.2% in the previous month. And then on the bottom, you look at the average hotel occupancy rate in April was slightly better than March 2025. And then if you look at the port cargo activity, again, was much better than what it was in April 2024 and in April 2022. And growth in air cargo is 11.5% compared to 10% 1 year ago. So, or even for that matter, minus 4.5% in April 2023. So clearly, the momentum of the economy, which picked up in the fourth quarter, is continuing into the first quarter, and that's a good sign. Also, steady urban and rural demand. We covered many of this in the monthly economic review, but we just wanted to use this opportunity to share with all of you. If you look at the fast-moving consumer goods, in the fourth quarter in FY25, rural consumption was high single digits, urban consumption was slightly on the lower side, and domestic air passenger traffic in FY25 was consistently across all months above the previous 2 financial years. And vehicle sales overall, three-wheelers, passenger vehicles, and two-wheelers have been maintaining their steady upward momentum. We are giving you the year-on-year growth numbers for April 2025 in the small box tucked in between the two charts. And the tractor sales performance in FY25 was 9.4 lakh tractors sold, almost as high as 9.5 of FY23 and better than 8.7 of we all know very well that the headline inflation rate is converging towards the target, and the food inflation has eased. And it is a good news that the Met Department has predicted both spatially and temporally well-distributed monsoon in the course of the next few months, and that also augurs well. So I think the conditions are in place for a low inflation, steady growth environment supported by monetary policy and also the fiscal stability, which is resulting in a very, very record tightening of India's 10-year bond yield vis-a-vis the American 10-year Treasury note yield as well. And in terms of the external sector, core merchandise exports, what we call core is basically non-petroleum, non-gems and jewelry exports. Core merchandise exports was $344.3 billion compared to $320.2 for a growth rate of 7.5% compared to the growth rate of 0.1% in FY23 and 1.4% in FY24. So there was a pickup in the core merchandise goods export growth. And if you look at the performance in April 25, it is definitely doing much better than the previous 2 Aprils. In terms of services sector activity, the balance of services trade, the surplus of $189 billion, higher than 143.3, 162.8 surplus in the previous 2 financial years. These are FY24 is a provisional number. And the services trade per se, in FY25-26, the first month of April, you can see that on the small box in the bottom middle, it is $35.3 billion of exports compared to the previous 2 Aprils, much better. And so is the case with exports, but with imports. But therefore, the gap still is close to about $17.8 billion, which is much bigger than the surplus earned in the previous 2 Aprils. And forex reserves are at their all-time highs. In terms of the months of import cover, it is very comfortable at 11 months. Gross FDI flows have been extremely very high, signaling continued interest in the Indian economy. The net FDI numbers are on the lower side, of course. We all know that, partly because of record repatriations and also partly because of record overseas direct investment by India. But thanks to services sector surpluses and remittances, etc., overall current account has been extremely well funded. And FPIs, while they may have been relatively willing to take profits from the Indian equity markets in the course of 24-25, they have come back in the last few weeks to the Indian market, given the overall macroeconomic stability that India offers. So the external environment poses no funding risk, but at the same time, we do have to increase our efforts with respect to attracting FDI in terms of global supply chain, China plus one, etc., as the global trends give us new opportunities and openings here. The central bank's monetary policy, the cash reserve ratio, and the policy cuts are expected to aid liquidity conditions and credit growth. We can see that liquidity conditions have improved on the back of the RBI operations. And overall credit growth is at 9.9%, which is above the nominal GDP growth of 9.8%. And if you look at specifically in terms of capital formation and how downstream finished goods production is supported, you can see that capital goods imports have been steadily rising, and the share of capital goods imports is somewhere around between 20 and 25%. And if you look at the overall domestic production of capital goods in terms of index and infrastructure goods, they have been steadily rising as well. Basically, for the level of economic activity, given overall uncertainties, the infrastructure goods and capital goods production and imports are well supportive of the growth expectations in FY 25-26. The Ministry of Statistics has also come out with the first time survey of capital expenditure intentions on the part of the private sector. It's the first survey, and they did point out that there is some bit of reluctance on the part of the survey participants to share their capital expenditure plans with the public authorities, and that probably signals why FY26 numbers have been on the lower side. But what is interesting is that the FY25 numbers were a big improvement over what was happening in FY24, and that showed up in the GDP numbers when we saw that there was a big increase in the share of overall gross fixed capital formation as a percentage of GDP in FY25, which we saw in an earlier slide. So there is a consistency in the data, but at the same time, we don't need to overread into the number given for FY26, as the footnotes by Ministry of Statistics itself clearly cautions us because of the reluctance to share full details on capital formation. And the intent on the capex side, broken down in terms of sectors: manufacturing, information and communication, transport, and others. So it's interesting to see manufacturing occupy a very good share of the overall capex spending intentions in the coming financial year, in the current financial year. In terms of the private sector data on quarterly announcements of new projects in March 2025, 14.4 trillion rupees or 14.4 lakh crores, and capacity utilization has been steadily rising, which augurs well for capital formation, not to disappoint in the course of FY 25-26. In terms of labor market, again, Ministry of Statistics is now beginning to publish monthly All India numbers. Urban unemployment rate has been coming down, and the labor force participation rate is on the high side. And in terms of monthly data, we are seeing in April 2025, labor force participation rate is 55.6%, and the worker population ratio is 52.8%, and unemployment rate is steady at 5.1% on all India basis. And net payroll additions in FY25 were close to 130 lakhs or 1.3 crores. Overall, new members growth has been steady in the last 4 years, close to around 80 to 90 lakh of people. But the net payroll addition is been more than 1 crore every year. Overall outlook for the economy, in general, I think in the circumstances, which is why we have been sharing with you comparative growth performance of other countries and also comparing the growth differential with advanced economies, both in the boom era in the first decade and now, Indian growth performance has to be seen in that context. This is globally, because of uncertainties, growth is expected to slow. India has faced, therefore, similar forecast cuts from global forecasters, but at 6.5 to 6.3 to 6.8%, which is what we have. In our estimate, it is still a very good growth performance in the current context of geopolitical and geo-economic uncertainties. High frequency indicators, we spent some time with you sharing how the trends look for the current financial year. The start is quite good and the monsoon forecast is good. Monetary policy is growth friendly. Inflation numbers are supportive of a growth-friendly monetary policy stance, and all of them together augur well. Or in fact, just before I came into this call, I was reading the weekly Greed and Fear by Mr. Christopher Wood, a long-standing India bull, and looking at the spread between Indian 10-year and US 10-year Treasury, he writes that to predict that one day the Indian 10-year G-Sec yield might be lower than the US 10-year T-note yield is not too far out, because the spread used to be as high as 600 basis points, but the spread has come down to around 170 basis points these days. So that was quite interesting, and that is partly because of the exceptional commitment and adherence and also accomplishment with respect to fiscal policy goals. Now, it obviously helps the entire economy, the fiscal prudence, because of lower cost of capital. When the benchmark cost of borrowing by the government drops to 6.2%, interest rates across the spectrum in the private sector will also be capped. In that sense, it will also come down. So I think the fiscal policy stance has actually been stimulative for the economy through its impact on the cost of capital. We spoke about inflation being benign, monsoon expected to be good, etc. Export performance, again, within the context of uncertain global trade, we have done very well. Merchandise trade growth has picked up last year, and so did service sector surplus continuing into the month of April as well. And the decline in crude oil price from around $80 per barrel to the 60s, and we all expect OPEC to announce another production increase in July as well. And considering that, I think clearly the upside to crude oil prices seem to be capped, and that is a good news for India as well, from both from a fiscal perspective and from a consumption perspective. Central bank rate policies are going to diverge globally, because some countries are looking at stagflation risks, whereas India is looking at this moment, in the context of where the world is, a fairly benign growth inflation environment. So we retain our growth outlook as something between 6.3 and 6.8%. Private consumption, especially the rural rebound and resilient services sector exports and steady capital formation as key growth drivers. Of course, international agencies are adjusting their growth numbers depending on global developments and domestic developments, and those the range is very similar to the kind of range that we have. So all in all, I would say, given the global environment, our economy is doing quite well. And if we continue with the efforts to bring in more foreign direct investment, and the private sector, if it continues its increase in capital investment, which we saw in 24-25, and urban consumption picks up on the back of, let's say, better capital formation, hiring, and compensation, then we can probably achieve a growth rate which is at the higher end of this range. If not, we will be closer to the lower end of the range of 6.3 to 6.8 that we have. Global risk factors would naturally be, of course, how the global financial markets behave, because in the last several weeks, from the middle of April until now, global financial markets have recovered, and so have Indian financial markets. and global bond yield also have come down. So overall, if there is renewed financial market volatility, etc., bringing additional layers of uncertainty, that will naturally cast a shadow. These are the risk factors we are tracking. You are reading about them in the monthly economic review as well, and we will keep you updated on that. With that, I end my presentation. As I said, we have a representative from MOSPI on this call. He will be happy to answer any technical question that you may have. Now the floor is yours. I request my colleague, Ms. Dr. Nanu Basheen, to moderate the Q&A session. Thank you very much.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I have decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
We have Kaustubh Jabal joining us this morning. He's Senior Vice President at Moody's Ratings, tracks the auto space as well. And they've put out a report, an in-depth report actually, on the automotive space in India, saying local and foreign car makers vie for share of India's market despite slow electrification. So very interesting report on what the EV space is. Kaustubh, good morning and thank you for speaking with us here at NDTV Profit. Great to have you on. Before we come to the report, and just because it's top of mind, any view on Bajaj Auto and the numbers that have come through?
Well, I'm not the lead analyst on Bajaj Auto. We don't have a rating on Bajaj Auto, but I can talk more broadly about the auto industry and our view through 2030, if that's all right.
Go ahead.
Well, we believe that India is a bright spot for car makers globally. India is the most populated country on planet Earth, as we all know. India is home to almost a fifth of the world's population. The country's population will continue to grow for the next few decades until it starts to plateau. And the car penetration in India is quite low, right? The number of cars per 1,000 people at less than 45 suggests that there is a roadmap for growth. Potentially, the car industry we forecast will grow at a CAGR of around 3.5% through the end of the decade. India's economic affordability is improving. Among emerging markets, India has a large working population. Its age dependency ratio, the proportion of dependents to the working age population, is also declining. So that's good. And today's youth from India also has an increasing propensity to spend. Rising income levels are supported by this propensity to borrow and spend. Over the last 12 odd years, we've seen vehicle loans have grown at a much faster pace than overall bank credit. So, these demographic dividends, we believe, continue to weigh in terms of the India's car industry's prospects through the end of the decade.
How do you see this? Hi, Kaustubh, good morning. How do you see the mix of ICE, which is internal combustion engine, versus EV and hybrids, really, which have not gotten a large share for various reasons, tax being one of them. But how do you see that mix going? Do you anticipate that it will continue to be dominated by IC for the foreseeable future?
Oh, indeed. I mean, electrification in India's car industry is in early stages. It's quite nascent. Penetration rates are quite low at below 2%. And if you compare this with the target, the government's target of EV penetration rates of 30%, there's a lot of ground to cover. EV adoption rates in India are low because of limited charging infrastructure, the higher upfront costs, and some bit of consumer hesitancy as well. I think China's success in building their robust infrastructure in terms of nationwide charging, localized production, that offers a good amount of blueprint for India to follow, especially if we want to reduce our reliance on oil imports. We forecast that battery electric vehicle sales, so pure BEV sales, will increase from the 2% penetration I spoke of before to around 12 to 15% by the end of the decade. So to your point, I mean, still by the end of the decade, large amount of cars are still going to be ICE, right? Internal combustion engine, vehicles. And which is why this remains an attractive market for global OEMs, global car makers who are selling electric vehicles in regulated markets, who will continue to sell in those markets, but they need to find, or they need to sell their ICE vehicles in a market, where there still is demand. So I think India remains, attractive proposition from that standpoint as well.
Kaustubh, there was good morning. It's still good morning to you as well. Yes, so good morning to you. And just wondering, the rumblings that BYD, for example, might be causing world over. India doesn't have such a large BYD presence, but if indeed in the non-conflict areas, which is the UAE or Singapore or wherever else where BYD is present, and if they're cutting prices, expanding sales, etc., does it put incremental pressure on other car companies to be very conscious on pricing, or maybe take it lower? Does it come at the cost of margins? Does it therefore impact the ratings because it might impact profitability? How do you think about that piece?
Well, I mean, globally, when you look at the car industry, electric vehicles, in terms of profitability, are not that profitable, right? Because of the upfront cost, because the elevated cost, especially because of batteries. And until such time that the cost of batteries comes down, they need to continue to sell ICE vehicles in markets, because those are the ones that are more profitable. So as battery prices come down, and they have indeed come down over the last couple of years, right? As battery prices come down, I believe the transition from ICE to EV from a consumer standpoint would also be easy. So, and in that vein, I think the investments that are happening in India in terms of laying out that infrastructure, the charging infrastructure, that will come in handy. So basically, that transition from ICE to EVs, we are talking about 12 to 15% penetration by the end of the decade. I mean, if you look at China, the pace at which it's grown in terms of electrification, it was all with the subsidies, of course, that were offered to the wider public, but also with the charging infrastructure. So if we put that in place, and if the battery prices come down, then obviously that's a transition that would be welcome.
Yeah, absolutely. You said it. But all things considered, Kaustubh, since you've studied the space, I'm just curious, among the Indian manufacturers, the OEMs, who according to you stands to grow much faster than the rest of the pack? Not just because of its products, but because it has an increasing footprint globally. You have Indian companies that are looking to export also.
Well, I mean, in terms of the Indian car market, it's a crowded space. We have Indian as well as international car makers. The Indian car makers have increased their market share over the last decade or the Japanese have lost market share, but they've lost market share in a growing market. It's a very competitive space in India, and some of these foreign car makers are also using or also manufacturing in India and using India as the manufacturing base. Now, from a car maker standpoint, I mean, product development remains on top of agenda, right? I mean, so the Indian car makers obviously, have to focus on the Indian market and have to develop products for the Indian market, whereas the foreign OEMs that are operating in India can use the product slate that they have for the for the global markets and tailor those products for the Indian market and sell those. In terms of preparedness, if you ask, I think every OEM that is operating in regulated markets is at some stage of electrification in terms of the development. But the proof lies in the pudding, right? I mean, electric vehicles are still not that profitable. So, for instance, the large automakers, say Toyota, for instance, who sell EVs, but in terms of the proportion of EVs to the total car sales, it's still low, but still on an overall profitability perspective, they remain quite high.
Just a word, Kaustubh, on the competition heating up in the two-wheeler space. In your assessment, is electrification going to be a larger driver in that segment compared to passenger vehicles? Because you've spoken about the issues with passenger vehicles, infrastructure, etc. How do you see key players stack up in the two-wheeler space?
Well, while this particular report that we published focuses on four-wheelers, I mean, the pace of electrification for two-wheelers is far more accelerated, right? I mean, the cost of a two-wheeler is also, significantly lower. The amount of investments are lower, as well as the charging infrastructure is lower. So the government's targets on electrification for the two-wheeler industry are also far more accelerated, and companies are progressing on on that front. Companies are also partnering or investing in startups to get ahead in terms of getting the right technology.
Kaustav, thanks so much for joining us this morning and for that perspective on the automotive sector. Pleasure having you.
Thank you for the opportunity.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out.
Rakesh Sharma, ED at Bajaj Auto, joining us now on NDTV Profit. Mr. Sharma, always a pleasure to speak with you, and thank you so much for joining us. Looks like a robust quarter, better than most estimates. I suppose the one fly in the ointment would be domestic sales and how they've been progressing, but you do see a turnaround there.
Yeah, indeed. Certainly the area of the 125cc plus segment, which is the top half of the industry, is a key area of focus for us. And there has been some erosion of market share over there. But, to put it in perspective, this segment really started surging post-COVID. And at that time, 3-4 years ago, we were at 19-20% market share based on registrations. And that sort of grew to 25.5 in FY24. And in FY25, we are down by about 1.5% as per our estimates. But we rather take this very strongly and react fast, because our ambition, of course, is to be at the leadership position in this segment. We are about 5-6 percentage points behind the number one. We are at a steady number two, considerably ahead of number three, number four. So we prefer to overreact. We have put in certain countermeasures in terms of expanding our portfolio to cover all the sub-segments in the 125cc plus segment. And we have seen some early signs, too early, but we are seeing some positive signs in April. And hopefully, during the course of the year, we should be able to wrest back the market share and grow faster therefore than what the industry is going to grow.
May I ask you to elaborate, sir, on some of those strategies that you've mentioned and you're seeing green shoots in April itself?
Like I said, we have introduced new variants to cover more sub-segments. We have introduced 6 variants so that, all kinds of customer cohorts have a choice which is apt for them. And these range from, very simple commuter variants in the 125cc to a very high performance upgrade in the Pulsar NS 400. So with the expansion of the portfolio, I think we've got a man-to-man marking, and we would be having for each competitor, and there are 3-4 competitors we compete with because we are straddling the whole segment, we would be having a model facing off with competitor models.
Right. With the 125cc coming in, would it be right to say that that will probably ease out the profitability pressures as well from higher share of, what came in on the back of higher share of two-wheelers, that's the entry-level ones, and the EVs? And secondly, the average selling price to an extent will improve further as well in terms of FY26.
Well, the profitability, as you know, has held rock steady at 20% plus over last 6 quarters, despite the ups and downs in the environment and the rise of the electric vehicles business, which was in FY24 10% of our domestic revenues, which is now doubled to 20% of our domestic revenue. So there has been a lot of dynamic management. It's been very helpful during the last financial year to have a slightly softer rupee, because it improves the realization and that drops down to our margins. Going forward, we will continue with the same approach of dynamically managing and trying to optimize growth, bottom line, and market share. Having said that, we will see some support from exports to KTM returning, because they were always at much superior margins. Overall exports continuing to clock 15% plus growth, and perhaps a steady cost environment. But the headwinds really are going to be, the hardening rupee. Already you know that towards the close of the last quarter, the rupee appreciated, and that would be a strong headwind for us to manage.
Right.
So we'll have to manage both these, the support and the headwind, and see how. But the aim, of course, is to always deliver a better class.
So Rakesh, interesting point that you made about KTM as well. Yes, the anticipation is it will start delivering in the second quarter of FY26, and that's what you've mentioned on the conference call as well. But taking KTM into its exit with regards to bankruptcy, how long will it take for the company to get back on track, and how substantial or how confident is the company to deliver on that front so that it supports this recovery that you've seen in the export business?
So the exports to KTM have already commenced in quarter one. Recommenced in April. There was a gap when they became zero because of the severe liquidity issue. There have been 2 sets of actions. One is to solve immediately is the liquidity issue at KTM and the paying off of the pared down debt. You know that there was a court supervised process where the creditors had accepted a 70% cut, and that 30% had to be committed by 23rd of May. And that has been done. The second set of actions is our intention to take majority control in KTM. That is subject to regulatory clearances, both in India and overseas, which may take a couple of months. We obviously believe that this is a very sound opportunity for us. We have been partners with KTM since, though at a minority level, since 2007. We have produced over 1 million bikes for them, which have been sold in 80 countries. We have an inside view on the deep franchise and the differentiated franchise which the KTM brand enjoys all across the world. And of course, there has been a convergence of unfortunate factors, the demand falling off, the e-bike business loss, the misreading of the volatility in demand, and the expansion of stocks and working capital. But the customer franchise remains quite vibrant. So we are very optimistic that it is a great opportunity. As soon as the regulatory clearances are through, we will put our shoulder to the wheel along with KTM and see, how it can be brought back on track, ready to race as soon as possible.
Just want to understand, Mr. Sharma, just on the EV strategy, and I know you referred to it briefly, but I want to get a little bit more into it. Is that the next growth driver you're seeing? Because the trajectory is there, but the margins perhaps are not.
Well, it's a process, Tamanna. So we've always been saying, even in the days when people were saying that, oh my God, now EVs are going to replace ICE. We on the ground, we never felt that EVs will replace ICE. I think companies like ours, which have a global business spread in 100 countries, and even in India, which is our major market, we will see the coexistence of different formats because these address different use cases, and the customers' needs are very, very diverse. So we feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24, but by Q4 of FY25, our EV business, which comprises both three-wheeler, e-auto, and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery, and of course it is less than the the best-in-class margins we have. But then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business. We were not in scooters. So this is a new segment which has become available to us in India and subsequently overseas. Similarly, in three-wheelers, the EVs are going, e-autos are going to areas where ICE autos were largely restricted, and we couldn't do business.
That's fine, sir. I'm not alluding to any cannibalization within segmentation. I'm just trying to understand if one of the largest companies is ready to make a pivot, and if it's making sense right now to EVs. In terms of a revenue share, where do you see this going down the line?
But that's exactly what I said. There is no need to make a pivot.
Okay.
This is not a 0-1 situation.
It's an add-on.
We feel that ICE and EVs will coexist, and we want to flourish in both. With EVs, there is no dilemma for us that, oh my God, we are replacing a high margin ICE with a low margin EV, because it is a new business for us. Yes, when you put the percentages together, it is lower percentage. But
so Rakesh, I think Rakesh, the question comes in over here is one of the peers who's come out and said for them to see a EBITDA break even, they will need to sell 25,000 units a month. If I have to look at a Bajaj Auto, for the margins to become an absolute lever for the business, to see what the other part of the business is doing, how many units of EV will Bajaj Auto need to sell to get that kind of a number out?
Well, I'm not aware of this maths which you have just...
no, this 25,000 is a competitor, I'm saying. Not for
so
Bajaj
I don't
Auto.
understand where that maths is coming from, but I told you that with our 3.5 series, which I think mentioned last time also, with our 3.5 series in two-wheelers, we are already positive, and like I just said, the entire e-portfolio which we have, which is 20% of our domestic revenues, is already positive. And on an absolute level, it is adding to the EBITDA pool. On a percentage basis at a corporate level, yes. But you see, that happens, that kind of maths is there everywhere. There are 108 countries. There are some countries which are highly profitable, and there are some countries which are negligibly profitable. And you have to manage size, growth, profitability, and a competitive position. So these are not, 0-1 black and white decisions. EV is an important segment. It is there. there is opportunity to make money, and we'll go ahead and do that.
Absolutely. Your point taken into consideration. My last question is with regards to KTM. Post the resolution, post the regulatory approvals, what's the plan with keeping Triumph and KTM business separate in Europe? How will that function? And two, who's going to head the KTM business? What's the strategy there? Is it going to be someone in-house, outside, someone with expertise in the European market? How are you looking at that aspect?
Well, these are very premature questions, but just to address one or two things so that there is clarity, there is no interrelationship between the way Triumph is working. Triumph is a strategic alliance. It's a non-equity partnership that is continuing. Triumph and KTM were coexisting even before this fracas which has happened with KTM. So that is continuing. In KTM also, we have, there is already a CEO over there, very, very efficient and very effective CEO who joined in September last year. And the CEO is building his management team, and they will continue to operate. Of course, once the regulatory approvals are through, we will work more closely with KTM to capture the synergies, primarily at the back end in manufacturing and R&D and procurement, and to some extent in the front end. And that work will begin in true earnest once those regulatory approvals are through.
One last question, Mr. Sharma. We've been speaking about FY25. We've been speaking about a longer-term outlook. You mentioned earlier in the interview that April is beginning to look good. Monsoons have hit early. Just want to get your sense of, what the feel is in terms of demand, and are you expecting this to boost?
Yeah, so what I said was that in terms of share, we are seeing improvement sequentially between Q4 and April, May, if I may also add that. But in terms of the industry, we are not seeing a big surge in the industry. Industry is in the, I'm talking of the motorcycle industry in terms of the registrations. It is in the positive zone, but it is not. We are not seeing any kind of surge. So it's a steady equilibrium position in which our countermeasures are yielding signs of some early progress.
Excellent. Thank you so much, Mr. Sharma, for that detailed conversation with Bajaj Auto. Always a pleasure.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
CDSL
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. We'll not fund you.
You prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
I'd done 40 investor pitches. The number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no.
When you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. Came out, sat into my rental car, and I crashed.
You crashed the car or you fell asleep? Why don't we have the next Google, the next Meta, or even the DeepSeek?
When you try to compare a US technology evolution and a Chinese technology evolution, for us it's only been 15 years. India should write the software on which the world should run.
Welcome. On this episode of The Disruptors, we're speaking to someone who we can safely say is the OG when it comes to at least unicorns, definitely. Naveen Tiwari had a unicorn when people were figuring out what do you mean by saying a company has now achieved unicorn status. Of course, founder of InMobi, not stopped at one. Glance is also now a unicorn. Naveen, thanks for coming in on The Disruptors. We've been wanting to have you on for a while.
Thank you for inviting, and I heard you recently started this show, and it's been a massive success. And thank you for doing this show, because I think India needs these kind of programs which actually talk about the disruption that's happening and how the world is changing.
Yeah. So a standard question that I ask people sometimes on the show is, why do you think you are a disruptor, or what exactly have you disrupted? So let's go back to 2007 when InMobi started. Of course, 2011 was when unicorn and headlines and all of that took place. What do you think that product and that idea changed?
At the time when we started, we had a very simple thought that internet on mobile is going to be large. Not many believed us. We said, we believed in that thesis. Smartphones had just started to come out. Apple had just launched the iPhone. Android wasn't necessarily there. It was just starting to come out. So we were like, hey, I think the internet on mobile phones is going to be big. And I remember going to like 40 investors, pitching to them to say, hey, internet is going to be big, and we think we will build the advertising ecosystem that will keep the internet free on mobile phones. Everybody like, okay, advertising is a brilliant idea. There is nothing that's going to happen on the phones. There is no internet that's going to come in on the phone. So please leave. But I think we believed in that. We believed in the principle of mobile mobile computation becoming really powerful, mobile consumption becoming very powerful, and we stayed at it. So I think the idea of disruption is when you believe in something that nobody else believes in, is when disruption happens. If we are doing something that everybody else believes is going to happen, that's not called disruption. That's just called like, hey, I am building, which is a commonly understood thesis. And I think the world requires a lot more of these kind of things, because how do you otherwise change?
So right now anyone listening to this will think that, oh, that's a done deal. Obviously, mobile is going to have internet on it, right? It seems so obvious right now, but for those of you who would remember 2007, it wasn't the case at all. At that point, what is the ability, or what did you see that you're saying 40 other investors did not? What was that thought process then?
It is very hard to explain why you believe something. Because if you could explain it, right, at that point, if I go back to 2007, if I could explain why I believe that, then it's a logic.
You saw something?
No, but there is no logic to it. You just believe that this is going to be the case. And many times you call it a gut feel, you call it a hunch, you call it vision, when it actually comes out to be great. But if you go back to that point of time, you're just adamant about it. And there is no logic. Yes, we saw some signs here and there. Ability to be able to make a decision with 20% information or data is what you basically need to be able to do. Many a times you would fail, but those few number of times that you would succeed, the success would be very big.
Yeah, and then stick to that conviction, whether you call it intuition or vision or whatever, even when everyone around you, and these would be intelligent people, right? If you're going to them for money, it's not, just a poll you're taking, and they're telling you कि ऐसा नहीं होने वाला है.
Correct.
What was the most cogent explanation you heard to say that what you think is going to be the future is not going to be the future, which would have almost convinced you perhaps?
I don't think I ever got convinced. I don't think anybody was cogent enough to actually give you an explanation. Everybody essentially looks for signs that it is going to happen. And I believe as an entrepreneur, you just need to have a strong conviction about something, because that's why you're an entrepreneur. Now, what everybody else says would be to say, hey, it's not happening. There is no way this would happen. All sorts of reasons. The internet is not fast enough on the phone. Everything was actually factually true. Everything was factually true. Yet, you stay at that conviction to say it'll become big. And that's why many a times it's termed as, being irrational. Or you can say, in Hindi you'll say pagal hai, right? San ki hai. But I think that's what's needed to become.
Success ke liye pagalpanti chahiye.
Absolutely. There is no other way you will disrupt anything until you believe deeply about a topic that the world would change in this way, and then it change.
So what was the breakthrough for you in InMobi? And for our viewers, explain what it does, how it's different, and how it was disruptive, the product and the idea way back in the knots, as they call it, 2007 onwards.
InMobi built an ad platform. An ad platform that was for the mobile internet. Many people think of the ad platform and say, oh, I get annoyed by the ads. But the purpose of an ad platform is very simple: to keep the internet free. If we don't build what we do, billions of users across the world will not be able to view and consume internet in a way that it is free to them. So this is a cost of keeping. Our technology is the ability with which we keep the internet free.
So he's the guy serving you ads on your phone. You know where to find him.
Yes.
You find it annoying.
And there are 15 such companies in the world that will do this. And that's why they become so powerful, because across, if you keep the internet free, that's a business model. And it's a very powerful business model, because imagine the beauty of the internet today. The beauty of the internet is that everybody has access to it. Everybody uses everything for free almost. And that's the best part about ad platforms. They are very powerful, very important, core, essential elements of any digital ecosystem. And that's what we built. And we're very proud of it. It's one of the largest platforms globally.
So the breakthrough moment that we were talking about, when you found someone to come and say, okay, I think there is an idea here and I'm ready to back it with cold hard cash.
We, as I said, I'd done 40 investor pitches. And I had just gotten so used to the no's that it was just painful. I was running out of money. I took on, I was like, okay, nobody in India seems to be, is willing to fund us. And so I flew to the US and I started going to to investors there. So the change between India and the US at that time was to say, everybody believed that an ad platform is required and mobile internet would come. So there was a huge shift. But then everybody questioned to say, wait a second, you're from India. Nobody builds product companies from India. Will not fund you. And so now I'd moved from India, not moved, I'd gone from talking to the Indian investors who were saying there is no place for a mobile internet in the world to a place where there was a place for mobile internet in the world, but no place for India and Indian entrepreneurs. Because there was no success there is no past, no history of Indian entrepreneur. Now, of course, I was getting very dejected. I was almost done and dusted, had no money, nothing was there. I was staying at a friend's place, going around Silicon Valley, pitching after pitching after pitching. Then one day somebody introduced me to Ram Shriram. He was an early investor into Google, also a board member at Google. And I was just fascinated by the fact that I'm going to meet Ram. And I was like, okay, fine, this is so cool. I will just go see him. And, of course, he's also going to say no. But you know what? I'm just going to go see him. So I just went out, made a pitch to him. 20 minutes in, he was like, Naveen, I've decided I'm going to give you $7 million.
Wow.
We will discuss the valuation offline. Tell me, how will you make this big? Well, here is the dichotomy of this. Here is me, an entrepreneur who is almost broke. I had 20,000 rupees left in my account. Now I cannot compute what $7 million means to me. And I was calculating in that time, I think the exchange rate was 40, 45 or something. So I was multiplying very rapidly. Very rapidly. I said 30 crores or something like that. I'm like 20,000, 30 crores. And now he's asking me a tough question to say, how will you scale? I have no idea. I have no idea how to scale because my mind was on survival. My mind was not on scaling the company at that point of time because, I was almost out. And that moment when he said this, I somehow figured out the next 30, 40 minutes of the meeting, came out, sat into my rental car, and I crashed. I slept in the parking lot. I crashed because the
You crashed the car or you fell asleep?
No, I fell asleep.
Okay.
I didn't crash the car. I did not ride the car. I was, it just took so much out of you, that moment to say, man, we are going to live. That moment, I remember it so vividly. I just slid into the car and I slept for 2 hours.
So,
in the parking lot.
Wait a minute. So you get out of a meeting, you finally have someone to fund you.
Yeah.
You say this is great, and instead of celebrating, you get into the car and take a nap.
Not a nap. I almost pass out. It was exhaustion for last 6 months of exhaustion and pressure. All of that just went away in the moment. And it is and I couldn't even call anybody. It was the middle of the day, so everybody in India was sleeping. My whole team was in India. Didn't call anybody, didn't do anything, just crashed.
The important lesson over here, for those who are right now maybe watching this and walking around with their pitches in their pocket or, trying to figure it out, you prepare for what to do when someone says no. Are you prepared for what to do if someone says yes?
Most probably you're not. I will give you that because the number of times as an entrepreneur you hear no, you're building a muscle internally just to deal with the no. Hearing a no is not easy. It is what builds a very different level of character. It breaks your ego. You go in, you make a passionate pitch. You must buy this, what I'm telling you. Take my vision and whatever I'm trying to tell you. No. And you got to smile and you got to come out. And 2 hours later, go and make the pitch again and again
Okay. So, the space that you are in, and I'm going to come to Glance in just a bit, and related actually, InMobi and Glance is, the challenge is also high because while you've had the first mover advantage, definitely, the moat is not high. The world figured it out, right? Internet on mobile, large platforms, advertising platforms. You're competing with some of the largest companies in the world.
Yes. And that's fine, by the way. So the way you want to think about this, there are only 15 large advertising platforms in the world. Advertising industry is close to $1 trillion economy. There will not be easily a 16th player coming or the 17th player coming. You're right. The top 2 or 3 players are really large and very powerful. But the way I think about this is if you take a fundamental innovative approach to some of these things and play the long game, it allows you to really build a very interesting moat in this business also, which today may not be as large as what these companies have put together, but the way this advertising ecosystem and the digital internet ecosystem is evolving, it is only a matter of time that you will also be a very formidable player.
No, fair enough. But okay, for example, who are some of your biggest competitors? A Google, a Meta, all also advertising platforms?
Yes.
So how do you stand a chance? I mean, I'm going to sound like some of your Silicon Valley early investors. A product company from India.
Yeah.
Standing a chance against these global giants.
But the best part is we're already standing a chance. That's the best part. We have gone after a global opportunity in the advertising space, and this is where we actually truly stand a chance. The thing that we did not have as an advertising company, which Google and Facebook have, which is a consumer business. They have a frontal consumer business, and at the back they have an advertising machinery. That's how they function.
Right.
With Glance, we actually have that consumer business also now. So therefore, you combine the power of the consumer business and the ad business, you become a holistic internet company. We have done that now. So I think the power of a global business, when you compete with the biggies, you truly come out with your own. And you have to have your own unique approach to building those kind of businesses.
Yeah, and you're competing globally, so there is a right to win there. You talked about Glance. Let's come to it and introduce our viewers to what that operation also is about. So as I understand it, using AI now to aid commerce. Why don't you tell us more?
Look, when the internet came 30 years ago, it changed the way we shop. It brought new shopping mechanisms with the likes of Amazon, etc. There's a new way which is coming, which is AI. With AI, the world has to change again. So back in December 2023, we built something as a prototype that I saw and thought that it would change the way the world shops. This was our version of Glance AI, which is a new way to shop using artificial intelligence. Currently, shopping is not an intelligent machine. Shopping, you as a consumer say, I want to buy this or I want to buy something else. Nobody is telling you intelligently to say, this is what you should buy. So first what we did is we trained a model of shopping on the world's shopping data. With generative AI, instead of showcasing the product along, just as a standalone product, let me put it with you. So we now put the product on you or around you in your spatial, space, and then you experience the product as if it's on you. So it is intelligent and it is generated both at the real time. And we feel with Glance AI, it is a chat GPT moment for shopping.
Just off-field question, Naveen. A lot of times the commentary around innovators are, especially Indian innovators, what are you making to solve the problems of the country?
Yeah.
Okay, so this comment came up time and again when recently in your city, Bengaluru, roads were flooded, everything's collapsing, and they were like, listen, this is the home of all of the innovators. Ye khana fatafat bhej rahe hain. A lot of the products are there to aid consumerism, but what are they doing to solve real world problems, especially of the country that you are housed in?
Look, I think this is absolutely correct, by the way. If you think about technology, we build technology that is solving the world's problem right now. That is a much bigger level of problem solving that we are trying to do. We are creating technology that will change the way the world shops, the world would experience. Now, we're doing that from India. We're doing that from heart of Bangalore. Once you do that there, everybody around is building those kind of technologies. It's not been done before. That level of technology creation has not happened before. When you do these kind of things, amazing people stay back in your country and work on these hard problems. We eventually are going to take these kind of companies public in India over the next several years. Our own community, our country will benefit from this. Now, how does one solve the road problem in Bangalore, infrastructure problem in Bangalore, etc.? Somebody should solve it. And absolutely it should be solved. We get all pained by, the Bangalore traffic and everything. But I think we should also realize that if somebody in India, I fundamentally believe India should write the software on which the world should run. We have that level of power in our country. If you take the global powerhouses, right, the US and the China, in terms of what they have created, US creates software on which the world runs. China creates manufacturing products on which the world, mostly utilizes. We should going forward, we should create products on which the world also starts to run. That's our possibility in the next 10 to 15 years.
So we have the capability of doing it. Why don't we have, so this question comes often, why don't we have the next Google, the next Meta, the next NVIDIA, or even the DeepSeek?
Oh, we'll have it. It's only a matter of time. I think we're confusing two different things. When you try to compare a US technology evolution and a Chinese technology evolution, you should realize, firstly, the technology evolution in those countries has been happening for 30, 40 years.
Yeah.
For China, it's been happening for 30 years, the US 40 to 50 years. For us, it's only been 15 years. In the first 15 years, we've built amazing technologies that have truly changed the way the country functions right now. Now comes a time over the next several years where we can hopefully now also write software and build products that not only our own country uses, but it's used globally. What we have done with Glance AI is probably one of those, is done for the first time. Just like when we became a unicorn, you were saying earlier, nobody knew what it meant. We also didn't know what it meant. Similarly, now when we create a global product that got launched in 140 countries, by the way, day before or last week, 140 countries. That's a scale at which nobody fathoms launching it, a product at. We have done that from India.
So, Naveen, I want to ask you this, and it's in a sense, a personal / professional question. How do you keep the enthusiasm and the passion up? Because you've also been a serial entrepreneur. You've also helped identify great ideas. We've had some of those products and brands and those people on our show, on the Disruptor as well. Razorpay, for example. So how do you keep up the passion for what you're doing? Because there's a couple of reasons people start businesses and grow big. One is that they want to get rich. That's already done for you. You want to make a successful product, already done. What is it that keeps you going and you feel you need to keep going?
Simple. We want to create technology that puts InMobi on the world map at a level at which it gets talked about alongside the likes of Google and Facebook and NVIDIA. That's the technology. That's our passion. That's what every InMobian is trying to do. To create technology, and that's what Glance AI has done. It has created a technology that has never been created before. I think it takes a lot to innovate, and innovate at a global scale, innovate for a global problem, in a way that the world functioning should change. We have tried to do that and done that, and the passion comes from the fact that the possibilities are so many in this world that it's not about getting rich, it's not about launching one product and being fine with it. It is about the possibility that exists in front of us that should excite not just me, everybody around. Our whole company, by the way. A large portion of our company has been with us for 10 plus years, large portion. They are equally excited about what we are doing today that they were 10 years ago. So it's not an individual phenomena. It is a phenomena of the company. Because innovation is a culture, not a thing to do once. And once you are innovating, you always feel very excited about, by the way, when you do innovation, you fail many times. So you have to be able to say, I'm trying, failing. Boom, here's a big success.
And then you don't know if you're going to have that moat. Is it going to continue to that level of success? Because things are changing so fast, especially with something like AI. Do you worry that, how do you stay on top of an innovation which is changing at a speed that no one can understand right now?
You asked me something at the beginning. You said, hey, I think we talked something about conviction. As entrepreneurs, as innovators, we don't worry about what can go wrong. Glance AI is right now live with about 1 million users in beta. They are not engaging with the product. They are obsessed with it. They are generating commerce real time. Real-time generation of commerce was not a thing in the past. They are doing it today. And when you see these kind of things, you see how the world reshapes itself because of your technology. That is a different level of excitement.
What is the change in trends or the way people shop that you will see because of this latest innovation that you're talking about?
In the past, trends, get created. Today, as users, you kind of follow a trend basis others' usage of products. Going forward, the trends will get created basis intelligence and basis what is great for you. So the trend will also become very personal, very individualistic. And I think that's where the world is headed. And by the way, that's going to cause changes in the way the supply chains will function, because in the past, the information from a trend to the production used to take a lot of time. Going forward, the intelligence of a change in trend or a new trend actually simultaneously passed both to the manufacturer and to the consumer.
So you're going to have shorter timelines, more personalization. Do you worry at all about privacy? In both the businesses, InMobi and Glance, I think privacy is on top of it, right? And this concern that technology, AI, whether you're serving personalized ads, that becomes a concern, or whether you have AI determine what you're going to wear based on your images.
Yes.
Is that something which is in mind?
It is not just in mind, it is paramount. Look, in the world that we live in, and it is paramount because if you don't solve for it, you don't exist as a business. These things are foundational now. They are not even to say, hey, is this it's core. So yes, it is solved at the get-go. No user information is ever released. No user information, it's all encrypted. Everything is sitting in the, the security levels are very high. All of these things are more or less resolved. They're not issues anymore.
Naveen, for people watching this, for entrepreneurs or wannabe entrepreneurs who have this fire to do something, but are looking for a problem to solve.
Yeah.
What is your advice to them? Where do you start to look for a problem to solve, and then you can find innovation?
I would say you can't go looking for a problem. You have to feel the problem. You have to feel something. Look, entrepreneurship is not a logical thing to do. You can't come in and say, oh, well, wait a second, let me go into my study and think of something and then come out. No, you have to feel it. You got to feel this to say, I think I should do this, whatever it may be. The thing to keep in mind is whether you choose a small problem or a big problem, the effort is exactly the same. So you might as well go for a big problem. Because, the chances of your success, if you choose something bigger, is actually higher. And the reason is, most people tend to solve a simple problem. For example, at Glance AI, we could have solved an image problem only. To say, hey, let me just create nice images for people. I can bet you would tell me 10 other applications that actually solve for the image problem. But we said, let's not just solve for, we will, along the way of solving the commerce problem, we will have to solve the image problem, which we did. We'll have to solve the intelligence of commerce problem, which is also what we did. We'll have to solve the shopping problem. We solved 3 problems, but we solved a much bigger problem. Back in 2008, InMobi was only India. Okay. One fine day we sat there and said, guys, let's build this into a global platform. It sounded absurd. Everyone in the board basically said, you're crazy. We agreed, but we went for it. Today, the reason why the company is so successful and so large is because we went and solved the really hard problem of building InMobi's ad platform across Asian markets, across Europe, across the United States. That is what I mean when you say, let's go solve the big problem.
So don't be afraid to bite off more than you can chew.
That is correct.
That's maybe where to start from. All right, yes. So success mantras and much more from Naveen Tiwari. Thank you so much, Naveen, for joining us on the show today. This has been absolutely fabulous.
Thank you so much.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations?
Thanks for staying with NDTV. You're watching the Friday edition of the World Report. I'm Arjun Samad Mahendran. Let's take a look at what's making headlines around the world. Pakistan's Prime Minister Shehbaz Sharif once again, viewers, has publicly admitted that Indian ballistic missiles indeed struck many targets inside Pakistan on the intervening night of May 9th and May 10th, with his army being caught off guard. According to Shehbaz Sharif, Pakistan was planning to attack India at 4:30 a.m. Viewers, this is just after their Fajr prayers, the morning Fajr prayers. But before that, New Delhi launched BrahMos missiles targeting many provinces in Pakistan, including an airport in Rawalpindi. Here's Shehbaz Sharif himself for you.
9th and 10th night, we decided to respond in a measured fashion to Indian aggression, and we had decided that at 4:30 in the morning after Fajr prayers, Pakistan armed forces, led very ably by our Field Marshal, Chief Army Staff sitting here, Syed Asim Munir, to teach a lesson to our enemy. But before that hour reached, India again launched missile attacks, BrahMos, and hit Pakistan's various provinces, including airport in Rawalpindi and other places.
According to reports, Hamas has said that the US plan for a ceasefire in Gaza fails to meet its core demands, but it will continue to study the proposals. Meanwhile, the White House has said on Thursday that Israel has signed off on US envoy Steve Witkoff's plan and that, in fact, it was waiting for a formal response from Hamas. The peace memorandum that Ukraine said it is expecting from Russia has in fact triggered differences between the two countries before their announced second round of negotiations scheduled for the 2nd of June. The two countries held their latest round of direct talks on the 16th of May. It was their first face-to-face negotiation since March 2022. In Istanbul, but the meeting ended without a ceasefire agreement. Meanwhile, Russian Foreign Ministry spokesperson Maria Zakharova said Tuesday that Moscow will send a draft peace memorandum to Kiev soon, which will outline the key principles of a potential settlement plan. Staying with Russia, where a top official praised North Korean troops for assisting President Vladimir Putin's military in the Ukraine war. Sergei Shoigu, Secretary of the Security Council of the Russian Federation, said the troops deployed by Pyongyang to Russia had fought valiantly in the Kursk region. Kremlin newswire TASS reported this on Thursday. A U.S. appeals court has reinstated many of President Donald Trump's tariffs. Now, this comes the day after another court, in fact, blocked them. The move puts a pause on a trade court's ruling that Trump, in fact, exceeded his authority in imposing his Liberation Day tariff regime, adding a jolt of legal chaos to the already uncertain surrounding Trump's global trade war. Now, Trump's advisors, meanwhile, who had condemned the tariff bloc as a judicial coup, celebrated the reprieve, but the possibility of the initial ruling being reinstated still weighs heavy on the White House. Despite the setback, however, Trump will likely be undeterred in his aim to rewrite the rules of global commerce in America's favor, as per many political experts.
The president's rationale for imposing these powerful tariffs was legally sound and grounded in common sense. President Trump correctly believes that America cannot function safely long-term if we are unable to scale advanced domestic manufacturing capacity, have our own secure critical supply chains, and our defense industrial base is dependent on foreign adversaries. 3 judges of the U.S. Court of International Trade disagreed and brazenly abused their judicial power to usurp the authority of President Trump to stop him from carrying out the mandate that the American people gave him.
Staying with the U.S., where Harvard University on Thursday, in fact, won another reprieve in its fight to keep enrolling international students. A U.S. judge extended a temporary block on the Donald Trump administration's plan to revoke Harvard's participation in student visa programs. Now, the move comes after the government said it would give the university 30 more days to contest the move. Here's more.
Today was graduation day for Harvard University, but it also marked another legal victory for the higher education institution. A judge in the US city of Boston banned the Trump administration from making changes to Harvard's admissions policy indefinitely. Arguing the university's case, the director of Harvard's Immigration Services said that the administration's plan to bar international students caused profound fear, concern and confusion among faculty and staff members. Ahead of the court hearing, the Trump administration backtracked on its foreign student policy, trying to diffuse the situation by issuing a letter giving Harvard 30 days to challenge the planned banning of international students. But the judge had other ideas, ruling the maintaining of a status quo, meaning that Harvard can continue to enroll international students. If President Trump's plan had come into effect, it would have affected around 7,000 Harvard students. That's more than a quarter of Harvard students' population, who hail from 140 countries around the world, including around 800 students from India. No more international students would have been allowed to apply to Harvard, and the current students who'd been there would have had to transfer to another college or university. The Trump administration has accused Harvard of multiple wrongs over its refusal to implement government reforms. It's blamed the university of inciting pro-terrorist conduct, fostering anti-Semitism, taking away spots from American students, and colluding with the Chinese government. Nick Harper, NDTV, Washington.
Meanwhile, India is in the process of currently reviewing a U.S. federal court order that has blocked most of the sweeping tariffs announced by President Donald Trump last month. Persons privy to the development have in fact told NDTV this. Now, the Court of International Trade in its ruling said the White House cannot authorize the president to in fact unilaterally impose reciprocal tariffs on all trading partners by invoking an emergency law. Now, the development comes amid the ongoing trade talks between New Delhi and Washington. The negotiations are progressing well, and the persons privy to this development have said, adding that a team of American officials will in fact be visiting New Delhi between the 5th and 6th of June. India's Ministry of External Affairs has urged Canada not to provide any political space to extremist pro-Khalistani elements advocating for violence and secession. Listen in.
Regarding pro-Khalistan elements, our position has been very consistent. Over several months and years now, we've conveyed our security concerns to the Canadian side, and we have also urged them not to give any political space to extremist elements, those who advocate violence and those who talk about secession or who talk about separatism. I hope that the Canadian side will take due note and will take due action against those who advocate anti-India agenda.
India and the European Union will conduct a joint naval exercise in the Indian Ocean from the 1st of June to the 3rd of June. The exercise will focus on advanced counter-piracy operations, interlopability, tactical maneuvers, and enhanced communication protocols, reflecting the growing maritime security cooperation between the two giants. Now, this is also in line with their shared commitment to a free, open, inclusive, and rules-based maritime order in the Indo-Pacific region, the EU has said. It is underpinned by respect for territorial integrity and sovereignty, democracy, rule of law, freedom of navigation, and overflight, unimpeded lawful commerce and peaceful resolution of disputes in accordance with international law, notably the United Nations Convention on Law of the Sea, it said in a statement. Multiple conspiracy theories continue to swirl around the January 6 Capitol Hill riots more than 4 years later, but FBI Director Kash Patel has promised a definitive answer, in his words, to one of the most pressing questions about the nation's shattering event is coming. Listen in.
More importantly, people have had questions about January 6th and whether or not there were FBI sources, not agents, sources on the ground during January 6th. And I told you I would get you the definitive answer to that, and we have. And we are in the process, again, of working with our partners to divulge that information, and it is coming. And I will tell you this. The answer to that question will surprise and shock people because of what past FBI leaders have said about it.
Former FBI Director Chris Wray eventually admitted to Congress there were 26 FBI confidential human sources in and around the Capitol January 6th, but not actual agents. Can you say that's true? Are there more than that? What you're learning from that?
I can say that that is definitely a piece of the truth. Why it took a ton of time for and questioning in Congress for the director to get that point is what I'm trying to eliminate from the FBI. If Congress asks you a question under oath, whether or not there were sources in or around January 6th at the Capitol, you as the director of the FBI need to know that and not deflect and give a DC answer. You have to be prepared for that. And that's the answer we're giving. That's the answer Chris Wray should have given.
And eventually everybody's going to know the whole picture.
Yeah, because the American people deserve that. And look, no one's more frustrated than me. Remember, I was Chief of Staff of the Department of Defense on January 6th. We said that we were ready, and the president had previously authorized the National Guard to be there days in advance. I spent 2 years, a small fortune, grand juries, to testify to the truth. And what happens now, years later? We were right.
An American flag was hoisted outside of the long-shuttered U.S. ambassador's residence in Damascus in a sign of growing ties between Washington and the new Syrian government. In fact, the U.S. ambassador to Turkey, Tom Barrack, who has also been appointed special envoy to Syria, arrived to inaugurate the residence as per a Syrian state-run news agency. Shifting focus to Europe, Western Europe, in fact, where France will ban smoking in all outdoor places that can be frequented by children. Now, the ban will come into force or in effect on the 1st of July and will include beaches, parks, public gardens, outside schools, bus stops, and sports venues, you name it. Now, breaking the rules would incur a €135 fine, or close to around 12,000 international rupees, $153, or of course, as I mentioned, around 13,000 Indian national rupees. Indian origin Republican leader Vivek Ramaswamy was viciously trolled as he made a long anniversary post with Dr. Apurva taking a journey down memory lane about, in fact, how they met each other, proposed and got married. However, amid growing tensions around the H-1B visa program in the US, the celebratory post was met with a series of racist and, in fact, anti-immigrant comments from ex-users. Apurva, is that an American name? One angry comment read, "You're both going back to India," another one wrote, "Who's falling for this tour of let's pretend to be American?" A third user commented. Vivek Ramaswamy is meanwhile being viciously trolled. Faizan Zaki nearly threw away his opportunity to go from runner-up to champion at the Scripps National Spelling Bee with a shocking moment of overconfidence. Given a second chance, he seized the title of the best speller in the English language. Now, the 13-year-old from Allen, Texas, who lost in a lightning round tiebreaker last year, outlasted 8 other accomplished spellers to win the title on Thursday night. That's correct. Now, this also includes 2 that he led back into the competition after his own careless flub. Here's the report.
Hi, Faizan. So if you spell this next word correctly, we will declare you the champion of the historic 100th year of the Scripps National Spelling Bee. Now, let's all of us take a deep breath.
Yes.
And let's...
That did not help at all.
Bro.
Smile.
Well, a certain pacing would help to follow.
Yeah.
Okay. Your word is éclaircissement.
Éclaircissement. E-C-L-A-I-R-C-I-S-S-E-M-E-N-T. Éclaircissement.
Calm line. Oh my god, that was like, I'm definitely going to be having nightmares about that tonight. But other than that, I do regret like spending a lot of time on the spell off. Because I think I got like too over prepared because I did the practice when I got 43 out of 45. So I think I really overdid that. So since they didn't even do it this year, but other than that, I'm just really happy, no regrets.
And over in Nepal, Mount Everest has suffered traffic jams this month as climbers battled harsh weather to make it to the summit peak. Hundreds of climbers and their Sherpa guides, in fact, signed up to scale the famous mountain in May, struggling against deteriorating weather on the world's highest mountain. Nepal's government, meanwhile, said on Tuesday it has a duty to protect the Himalayas from the risk presented by climate change and the sheer growing numbers of climbers attempting to scale the region's summits, especially Mount Everest. Over in Argentina, hundreds of advocates for people with disabilities, including families and service providers, took to the streets, blocking the nation's National Congress, protesting the severe government cutbacks that have exacerbated years of underfunding. The protesters demanded the advancement of the Disability Emergency Bill, initially scheduled for debate on Thursday, but now it has been postponed until the 4th of June. Meanwhile, listen in to what the protesters had to say.
Están cumpliendo con las terapias, no están cumpliendo con las sesiones y no están cumpliendo con los terapeutas. No nos están pagando hace 5 meses a los terapeutas. Los terapeutas durante estos 5 meses seguimos atendiendo a nuestros pacientes, pero ya no damos más. Están empezando a cerrar consultorios, están empezando a cerrar escuelas especiales y estos pacientes se están quedando sin terapias.
A new study has revealed that 4 billion people experienced at least 30 additional days of extreme temperatures over the past year as a result of climate change, with nations in the tropics the most severely impacted. Indonesia and Singapore have both recorded an additional 99 extreme heat days from May 2024 to May 2025. All this while a number of other Caribbean and Pacific Island states and territories each had more than 120 extra hot days the last year. Now defined as hot days when daily temperatures were above 90% of the historical average for a given location, or for any given location in this case, viewers, it has caused illnesses, deaths, crop losses, and also strained energy and healthcare systems. Listen in.
We found that for 4 billion people, so half of the planet, climate change has increased the number of extreme heat days quite dramatically. And in almost all countries in the world, the number of extreme heat days has at least doubled because of human-induced climate change.
And on to the world of business now, where amid growing US-China tensions, US Treasury Secretary Scott Bessent has in fact said that trade talks between the two countries are a bit stalled, in his words, pushing for a call between President Donald Trump and his Chinese counterpart Xi Jinping to reach a deal, in fact. Now, Bessent believes more talks will happen with Chinese officials in the next few weeks, and also sees the personal involvement of both countries' leaders as crucial for the talks to progress. Now, this comes as the Trump administration announced it would in fact start revoking some Chinese student visas. It's a move that Beijing has called discriminatory. Meanwhile, Washington has also introduced new restrictions on sales of chip design software and reportedly some jet engine parts to China as well. Nippon Steel has said that it plans to invest nearly 870 billion yen to introduce electric furnaces at its 3 domestic plants to reduce carbon emissions. According to the company, Japan's government plans subsidies as much as 251 billion yen of the steelmaker's decarbonization efforts focused on 3 plants by the 2029 fiscal year, in fact. Over to the US, where the Securities and Exchange Commission on Thursday voluntarily dismissed its civil lawsuit against Binance. It's the world's largest cryptocurrency exchange, for prospective viewers, extending the regulator's new approach to cryptocurrencies since President Donald Trump returned to the White House for a second term. The dismissal by the SEC comes 2 days after the agency accused Binance of illegally serving US users and misusing customer funds as well. The SEC was the last major regulator still pursuing Binance after a $4.3 billion settlement with the US government last year that also saw founder Changpeng Zhao plead guilty and step down. And the sports wars, Gujarat Titans and Mumbai Indians will clash in a must-win eliminator in New Chandigarh on Friday, with both teams desperate to keep their IPL 2025 campaigns alive and advance to the second qualifier. Now, the match will be played at the Maharaja Yadvendra Singh International Cricket Stadium in New Chandigarh. The world number 1 Yannick Sinner sent Frenchman Richard Gasquet into retirement Thursday with a 6-3, 6-0 and 6-4 hammering in the Battle of Generations, as it's being termed now, at the French Open to ease into the third round of the competition. It was the second time in as many years in Paris that the 23-year-old Sinner beat local hero Gasquet, who said, in fact, he would end a career that began over 2 decades ago and yielded 16 tour-level singles titles after his home Grand Slam, of course. On the football pitch, Bayern Munich's Harry Kane said playing Boca Juniors in a revamped Club World Cup will be special. The two face off in Miami on the 21st of June. Now the competition, in fact, that has been promoted by FIFA President Gianni Infantino himself and President Donald Trump as well, begins on the 15th June as Inter Miami host Al Ahly. The tournament is being played across 11 US cities and 32 teams battle it out for the new gold trophy. Owen Wilson premiered his golf comedy series Stick in Los Angeles with the admission that he'd been intimidated by the sport when he was younger. The 10-episode Apple Plus TV series follows Wilson's Bryce Cahill, a pro golfer at a low point in his life who begins mentoring a teen golfer being played by Peter Teja. Listen in.
Well, that's, usually what humor's masking or something, and I think that's the case with price. So, it's funny, I was kidding with Mark about, these characters are a bit broken, and, maybe the good thing about being broken is that, you're already broken. What can they do to you? What are you going to break me? Too late.
And as Detroit Opera officials made plans last fall to add a production based on the last Central Park 5 to their 2025 lineup, then presidential candidate Donald Trump loomed large and just off stage. In fact, the opera puts to music the story of 5 Black and Latino teens imprisoned for the 1989 rape and beating of a white woman in New York's Central Park, and also prominently features Trump as a real estate showman calling for the death penalty in the case. Well, that's all we have for you this Friday. Take care and have a wonderful weekend.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
Hello and welcome. Good evening, viewers. This is Ask Profit only on NDTV Profit, and I'm your host Malika Mishra.
And I'm your host Himakshi Bahugna, and together we'll be taking up all your stock-related queries. So don't forget to WhatsApp us or call us directly. Both the numbers are flashing on your screens right now, viewers. And on the show, we are joined by Mahesh M. Ojha on the fundamentals and Sundar Kevat on the technicals. Welcome to the show, gentlemen.
Good evening, Himakshi. Good evening, Malika.
Good evening. Now let's get started with the show. First query is written to us from Hyderabad. Hari holds 50 shares of Nesco at 963 apiece. He's looking for a long-term outlook on the counter and very tiny bit of loss that he's incurring at the moment of almost 2,000 there. So Mahesh, what's your outlook on Nesco for long-term?
I think he can hold further because if you are looking for a longer term, I think 1,150, 1,200 level could become in 1 year horizon. So he can hold further if his horizon is 1 year at least, so he can hold.
Okay, and Sundar, coming to you on the technical front as well. So what are the charts suggesting for Nesco?
Yeah, so Himakshi, I could see on weekly time frame there is a kind of bear flag pull pattern, and I could see that from there itself the stock could correct till 725 level, that is the 200 week moving average. So I would suggest the viewer to exit the stock and accumulate at the support of 200 that is placed somewhere around 730 levels. So yeah, this is my view.
Okay, all right. That's the view on Nesco. And now we will take up another WhatsApp query. Ashok has written to us from New Delhi. He currently holds 335 shares of Samvardhana Motherson International at 102 rupees a piece. He's sitting on a profit of about 17,000 and is asking whether he should continue holding for the long term. Mahesh, speaking of Samvardhana Motherson, firstly, the company has announced a 1:2 bonus issue, and plus the stock has gained right after its Q4 announcement. How does the stock look like to you, and do you think there is more prospect for our viewer to make much more profits than he's already sitting on?
See, the Samvardhana is a long-term peak. I think if any investor is holding, definitely they will make money in a longer term period. In shorter term period, we can see some upside up to 165, 170 zone. But if we are looking for a longer run, then we can see 200, 200 plus level, at least in Samvarna. But some consolidation, we can look some consolidation in near term, as many hurdle we companies facing from a tariff concern and all the other things. So some hurdle could be near 170. After that, but if any positive trigger coming, then we can see a 200, 220 level, at least in a 1 year horizon frame.
Understood. Thanks for that view. With that, we are joined by our first caller on the show from Chennai. Hi, Kanan. Good evening. Kanan, are you there on the phone line? I think we've lost Kanan there, but we have his query. So he holds 75 shares of L&T at 2,600 rupees. He wants to add more, and he hasn't mentioned. He has mentioned that he wants to stay invested in this counter for longer term. And currently, I can see that he's sitting on a profit of almost 81,000 there. So Mahesh, directly coming to you, currently it's trading at 3,675. So do you suggest that these levels are correct to accumulate more?
I think yes, the Larsen recently posted number posted are very good, and company like a Larsen is a longer term player, longer term holding stock. So I think much more potential in a Larsen. But yes, if you are holding from a 1 year perspective, I think 4,200, 4,400 level could become easily. And also dividend yield is also attractive, and safety concern is there, Larsen like company. So he can hold further from a further accumulation, and if any downside near 3,520 level, they can add further on that level.
Okay, and Sundar, talking about the technical aspect of the counter, I can see on the charts that the stock hit its bottom on 11th of April. But since then, now we can see an upward, trajectory there. So what do you make of this, chart figures?
Yeah, Himakshi, first of all, I like to correct you. The stock has made bottom on 7 April, and then from there itself, the stock has given a strong run up, and currently it is holding on to its long term, that is 200-day moving average, and it is comfortably trading above it. Now, Himakshi, I would like to say that this kind of counters are best for mean reversion trade. That is that if there is a kind of resistance which I can see on chart, that is at around 4,000 level, to be exact, the price is 3,950 level, and then from there itself the stock could resist and it could fizzle out. So I would suggest the viewer to hold the stock till 3,950 level and see if the breakout is given more clearly. If somehow L&T manages to close above this level on weekly time frame, then we could see that new highs coming from this stock. Otherwise, this stock is better for mean reversion kind of trades, not for a long term or higher rise and higher low kind of structure of trends.
Okay, understood. Thank you so much for that. And now we are being joined by Priyanka from Hyderabad. Hi, Priyanka. Good evening. Priyanka? Okay, pin drop silence, no issues. Priyanka from Hyderabad had contacted us to inquire about her shares in Welspun Living. Now, she currently holds 500 shares of Welspun Living at 147 rupees a piece, and the stock has dipped about 9.6, close to 10% in trade today itself, and maybe most probably also reacting to its Q4 results, where the net profit declined by about 9%. So mixed set of financial metrics for Welspun Living. Mahesh, speaking of this textile player, how do you see Welspun Living treading the future path, and do you think investors like Priyanka should continue investing because they're sitting on a loss at the moment?
Definitely, the company is fundamentally good, and I think if your horizon is a long-term period of time of 9 to 12 month horizon, I'm not talking about 1 to 2 months. If your horizon 9 to 12 months, if anyone getting nearby 124, 128, and then they can accumulate further on these levels. Fundamentals of company are very good. Recently, we have seen 220 level buyback in this company. So 160, 165 level could become easily, and after that we can see up to 175, 180 zone if you are looking for a 1 year horizon time frame. So yes, if you are holding, then can hold further.
Okay, understood. And Sundar, taking this question to you as well, I'd just like to simply get your technical perspective here on just the charts. now that the stock price is trading somewhere around its 50-day moving average as well as 200-day moving average, and that being almost in line with where the stock price was poised, say, a year ago, how do you really, technically speaking, strategize your investment in such stocks that don't move a lot in, say, a 52-week period?
So, Malika, I would like to first narrate this stock. So, the stock has beaten left, right from 200 levels, and currently, as correctly said, the fresh lows were made at around 106 level, which was around 3 March. Now, technically, if you see, the stock is taking a strong resistance, and it has accepted the strong resistance at 200-day moving average. Additionally, the short-term and the mid-term moving averages are also bearish for me. Now, talking about what kind of strategy could be adopted from this kind of counter. So I would suggest that if the stock breaks somewhere 106 level, and further if it forms some kind of higher high pattern, then only then we could try to enter in this counter. Otherwise, this kind of high beta counters are not good at all, because if the selling comes, then the selling is more sharper than buying. So I could simply say that if the stock price crosses below 106 level and there is a kind of higher highs and higher low pattern, which is a classical characteristic of an uptrend to reverse, then only then the viewer should add. Otherwise, this counter does not look that attractive to me.
Understood. Thanks for that view, Sundar. Now let's go across to a caller joining us from Hyderabad. Hi, Chandu. Good evening.
Yeah, very good evening.
Yes, please go ahead with your query.
I want to buy Insecticide India Limited.
Yeah.
What price? I want to know the fundamentals and what price I need to buy it. Yeah, it is for short term viewing. This is not stock.
Okay, so a short-term view on insecticides. Am I correct?
Yes.
Okay, but firstly, I'd like to come to you, Mahesh, on the fundamental aspect of it. So how has insecticides performed in terms of revenue and profit growth in the last couple of years?
So if you're looking from a last few years or a few quarters growth, so then we can see some steady revenue type pattern in insecticide. But if you're looking from a last quarter, which is recently posted, there is a margin expansion in insecticides. So I think investors can hold for a further upside move up at least 950 to 980 zone, where we are looking some more upside. Then come after closing 980, we can see some more upside. But yes, from current view, 950 to 980 zone could become easily in insecticides.
Okay, so 950 to 980 zone could be, it is a reachable level. But Sundar, also, it's currently trading at 851. So do you suggest that these are the correct levels if somebody wants to invest in this counter?
No, Himakshi, this is not a correct level to invest. I could see that on 29 May, there is a kind of shooting star pattern which is formed on daily time frame. And if I draw Fibonacci level from 653 to 892, the 50% correction is at 770 level. This is a correct level to add on the stock. And apart from this, all the moving averages, that is the 200 and the 20 moving average, could meet at this point. So 770 level is a good level to buy, but not at this price, because stock can face some selling pressure from current levels.
Okay, understood. And now we are being joined by Rahul from Chandigarh. Hi, Rahul. Good evening.
Hello, ma'am. Good evening.
Hi. Please go ahead with your question.
Ma'am, I have a query regarding Aurobindo Pharma.
Okay.
I invested 10 shares today at 1151. And I would like to add more into this stock, considering its long-term outlook.
Okay.
But I would like to understand what are the levels going forward when I should add it. I have just added 10% of my portfolio into this, and what is the long-term view on this stock?
Okay, Rahul, just wanting to know from you, what was the motivation behind buying these shares of Aurobindo Pharma recently?
Ma'am, I went through the report on this company. Although the outlook seems weak, the next quarter they are just projecting a single-digit growth. But quarter two starting onwards, they are projecting a double-digit growth. and even with the the US tariffs coming on, still their last quarter performance has been good. So that's what motivated me to invest and look forward into this.
Okay, very interesting. You've actually helped me ask this question to Mahesh. Mahesh, Rahul from Chandigarh firstly holds 10 shares of Aurobindo Pharma at 1,151 rupees a piece, and the stock is now trading around 1,148 or thereabouts, and it was also down about 2% in trade today over that. The question is that viewers like Rahul who are interested in the pharma space, do you think just because Trump's tariffs are now a big question mark and there's uncertainty around that space, around that subject per se, is it the right time to enter pharma? Because pharma, I remember, was one of the the heaviest beaten sectors when Trump's tariffs and their implications were affecting many sectors around the corner. But now, given how pharmaceutical companies have substantial exposure to the US and Indian, pharma companies like Aurobindo are, strong players of generics especially, do you think it's the right time to enter?
I think from an Aurobindo Pharma perspective, I think investors should wait for any down dip side. I think 1,050, 1,000 level could be a correct level for Aurobindo Pharma. From pharma perspective, I think Cipla is a current level, Cipla and Sun Pharma, which we are looking some comfortable zone in Cipla and Sun Pharma. So on these two stocks, we are optimistic for some upside. But from Aurobindo Pharma, I think some downside could be come in these stocks, and after that, what they can review further for any investing matter. From current perspective, Cipla and Sun Pharma are preferred.
Mahesh, just a counter. Are you recommending Cipla and Sun Pharma because they have been very successful at creating solutions at a cheaper price and have been able to gain substantial amount of market share? And is that the reason why you're suggesting both these counters over Aurobindo Pharma?
If you're looking on a price basis, the Cipla is pricely attractive, which we can see from these level, we can see some more handsome upside on that counter. Aurobindo is not giving some more space compared to Cipla and Sun Pharma. So I think from that perspective also, from price perspective also, we have some more space compared to Aurobindo Pharma. And from your point of view, also agree with the same.
Okay, thanks for that view. Now we are joined by Amit on the phone line from Hyderabad. Hi Amit, good evening.
Hi, hello ma'am, good evening.
Yes, please go ahead with the query.
Ma'am, I'm holding Vijay Diagnostic. I got the IPO allocation. About 56 shares at 531 average price. There are a couple of questions. Given a little bit COVID is on the rise, do you think it's a good stock to hold for long term? And I want to know from the experts, how long is long term? Because it's very subjective. The long term is very confusing. So if the experts can throw some light.
Absolutely, absolutely. We'll get your query answered. So Mahesh, firstly, Vijay Diagnostic, if I talk about, it's currently trading at 956. And also it's a leading diagnostic Medicare service provider in southern India in particular. But, talking about its valuations, don't you think that it's a bit highly valued with compared to its peers like Dr. Lal Path Labs, Metropolis or Thyrocare? And also, if, rightly said by Amit, that, what is a long term? Like when we talk about long term, so what view do you have? Is it like a 1 year view or a 2 year view or a 3 year view? So for how long should our investor actually stay invested in the counter if they want to invest in a counter like Vijay Diagnostic?
If you're looking for a long term, that could be a 1 to 3 year horizon. From a shorter term period, we can see 3 to 6 month horizon. From a Vijay Diagnostic perspective, I think investors should book some profit here and switch their position to other counter like Laurus Labs and others, where we can see some more upside potential in a particular space. But if you are looking from other perspective, you can switch in other pharma companies like Natco Pharma recently posted some good numbers where we can see some more potential like Cipla like counter. So that is the point of view. If you are looking for a longer term, that stability fundamentals of company that could should be watchable more. So I think from this counter they can switch, and they can switch in Natco Pharma as well as they can switch in Cipla, where we can see longer term and stable growth in the companies.
Okay, so you are suggesting a sell on Vijay Diagnostic and a buy on Cipla and Natco Pharma, am I correct?
Definitely.
Okay, okay. And Sundar, on the technical front, for the short term, for any investor who wants to invest in this counter for like 3 to 6 months, so what suggestion do you have for them?
See, Himakshi, on Vijay Diagnosis, if I say so, on daily time frame, the stock is creating a classical pattern, that is descending triangle pattern, and I could see that there is a support at 886. So if this level is taken out and a close is given, then I am not surprised. I will not be surprised, Himakshi, to see this counter trading at 700, because this is a bearish pattern. Now, I would suggest that this counter should be avoided. Apart from this same sector, I could say that there is a stock named Thyrocare. Thyrocare looks positive to me, and it has recently break its recent highs of around say 1050 level. So I'm positive on this counter, and we could expect targets till 1200 to 1300 in coming days. And apart from this Thyrocare, if you want to put a stop loss, then the stop loss should be placed below 900 level, where the 50-day moving average and the 20-day moving average medium is placed. So I'm bearish on Vijay Diagnosis, and I'm positive on Thyrocare.
Okay, positive on Thyrocare. And now we're being joined by Mansingh from Kurnool. Hi Mansingh, good evening, welcome back.
Hi ma'am, very good evening.
Good evening, please ask your question.
I'm holding NTPC 100 shares, madam. Average price is 65 rupees. I want to invest in power sectors. Should I continue to invest in the NTPC or any other power sector, any other power structure stock, power sector stuff? Or should I continue to hold in this? Where should I accumulate more number of shares at a support level? What is the good support level? Where should I accumulate more stock? Or should I add another stock?
Understood. Got your question, Mansingh. Mahesh, speaking of NTPC, Mansingh from Kurnool firstly holds 100 shares of NTPC at 365 rupees a piece. The stock has dropped about 30 odd points, 334 per B. It's trading, and it was also down about 1.5% in trade. My question to you is that because Mansingh wants to invest in the power sector, do you think NTPC is the right stock to go ahead and invest in?
See, the NTPC is low beta stocks. So if you're looking for a longer term period and more stability type of investment, then you should choose the NTPC. Apart from that, many more stocks in power sector are available, where some more volatility kind of stocks that can give also more high return compared to NTPC. That could be Tata Power. I think Tata Power has a much more potential for upside. So they can look on Tata Power also. Says one of the other counter where we are looking some more potential for upside. But concern is that you investors should keep horizon at least more than 1 year, because power stocks has a time cycle, and they are giving return over a period of time. So NTPC on this level are not bad, and we can see some more upside up to 450, 460 level, at least if you are holding for above 1 year perspective. So NTPC also can be hold, but yes, if you are looking for other stock, SES and Tata Power are preferred.
Okay, all right. And Sundar, speaking of the technicals of NTPC, correct me if I'm wrong. I noticed that since March of 2025, the stock price has been consolidating per se, or trading in a range-bound manner, and before that it was on its downward swing. My question to you is that when do you think NTPC would be able to go back to its high point, which was back in October of 2024?
Malika, it is difficult to say that when it could go towards its new high, but I can probably say that this stock could, face some more selling pressure. The reason for this is that on daily time frame, the stock has created a pattern which is called as bear flag pattern. And apart from this, it has recently witnessed 20 and 50-day moving average crossover. Plus, you can say that it has broken its important support level in today's trading session. So new high, I am not sure it will make in coming quarters, but yes, I could see some selling pressure till 300 levels, and from there itself, the stock can pick up some good momentum, and we could, scalp some 15 to 20% profit. But apart from this counter NTPC, I could say that better counter for me is not NTPC but CG Power. Now, if you see CG Power, it has given a fresh breakout of 685 level, and currently it is consolidating near its 200-day moving average. So a breakout above 705 level could ignite the stock, and I will not be surprised to see this stock trading at 795 level, which was its recent resistance.
Thank you so much, Sundar, for that. Now let's go across to a caller joining us from Tamil Nadu. Hi, Naveen. Good evening.
Hey, hi, good evening.
Yes.
I hold 1250 price for MGL, roughly 400 shares. And I would like to hold them for like 5 to 6 years given any market cycles.
Yeah.
I think that including the dividends, I am hoping that I will be able to double my money there. Thinking that the adoption of CNG is going to increase across light to medium commercial vehicles along with the passenger vehicles.
Yes, yes.
And all the regulatory changes around gas allocations are almost done.
Yeah.
So I want to ask whether my thinking is right, and will it happen in 5 to 6 years?
Okay. So very well said. Mahesh, considering the gas space, how well is MGL positioned for the next 4 to 5 years for somebody who has made significant profits and who also wants to stay invested in the counter?
Definitely, they can stay in MGL for a longer term period. But yes, if you're looking from a 1 year perspective, we can have worked for a 1 year perspective. I think 1,600, 1,650 level could become in 1 year horizon. Because in this sector, we are seeing many regulatory changes on time to time. But over a period, yes, I am agree with the investor that we can see some demand in this sector, and we have seen some we can see some more decent upside in this counter. But yet I can say if your horizon is 1 year, you can hold further from 1 year perspective. I think it's looking attractive for me. From 2 to 3 year, we can see some quarter result and commentary from the management and from the sector specific changes. So from 1 year perspective, I can say they can hold further.
Okay, so 1 year it's positive, and after that, we'll be monitoring the quarterly performance of the counter, and then probably, we can take a call on that. And, Sundar, I'd also like to come to you. What are the charts suggesting for MGL?
So, Himakshi, on daily time frame, MGL is currently into a rising channel pattern, and I could see that the channel is very narrow. If I draw the lines, the channel is from 1430 to 1310 level. So this is a very narrow channel, and it is a kind of sideways pattern only. But if you see, in coming few weeks or coming few months, the stock could outperform the market because it is at its support level now. And I could see that the 200-day moving average, which is currently at 1146, the disparity between current market price and the moving average is a bit higher. That is around 5 to 7%. So I could say that this stock could be a mean reversion counter for me. And other than this, Himakshi, other than MGL, I could say that one more stock from this sector, that is Adani Total Gas, it's looking positive on chart. I mean, if you see, the stock has created a higher high pattern, and apart from this, there is one hurdle to this stock is the 200-day moving average itself. But in Monday or Tuesday trading session, if the stock price closes about its 200-day moving average, then the stock could be kept on radar, and I would not be surprised to see this stock trading at 8-10 levels in coming few months.
All right, Sundar, thank you so much for that. And now we're being joined by Vikas from Pune. Hi, Vikas.
Hello, ma'am.
Please go ahead. Yeah.
So I hold 27 shares of Bajaj Finance.
Okay.
for 73, 75.
Okay.
And I would like to hold them for a year or half. I wanted to understand what should be my target price and what should be my stop loss for the same.
Sure. And when did you purchase these 27 shares, Vikas?
Around 6 months back.
Okay. Okay. All right. Got it. Sundar, let's talk about Bajaj Finance. Firstly, before that, Vikas from Pune holds 27 shares of Bajaj Finance at 7,375 rupees apiece. And since the time he purchased these stocks, the stock price has moved up to about 9,180 rupees. And speaking of Bajaj Finance itself, I think it has been one of the most favorite stocks of investors in the NBFC space, particularly because of how it has risen and been resilient to the entire uncertain environment of the markets. But could you suggest a stop loss for this stock, and do you think the momentum will continue?
So in short, the momentum will not continue. Now I'll tell you the reason why. So the stock has corrected from 9,620 level, and currently it is holding its short term, that is 20-day moving average. And if you see from past 1 or 1.5 week, the stock is into a tight trading range. That is a clearly sign of loss of momentum. So I would suggest him to place a stop loss below 9,000 level. If the stock price crosses below 9,000 level, then he should book his profit and take home his profit, and he should exit the counter. And if he wants to add, then the support level is at 8,740, the first support, and the second support is at 8,300. And apart from this, Malika, I would like to say that the current market price and the 200-day moving average, the disparity between these two prices are pretty much high. This is a classical example of mean reversion. So I would not be surprised, Malika, to see the stock price trading at 8,300 level in coming few months, say.
So the stock price could fall based on technical analysis, but viewers, we will have to slip into a short break. But keep sending in your queries on WhatsApp as well as call in. We will be right back for Ask Profit only on NDTV Profit. So stay tuned.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of
Hello, welcome back viewers. You're watching Ask Profit only on NDTV Profit, a show that answers all your stock related doubts. So do not forget to call us on the numbers flashing on your screen. You can also write to us on WhatsApp, but we do urge you to pick up your phones and call us so that you can get the best investment advice, that too live. And today we're being joined by Mahesh M. Ojha on the fundamental front and Sundar Kewar on the technical front. So do call in and hurry. We're now being joined by Radhakrishna from Bengaluru. Hi Radhakrishna, good evening. Okay, no problem, we have his query. Radhakrishna from Bengaluru wanted to know about Canara Bank. He currently holds 7,020 shares, Right, 7,020 shares bought at 17 rupees a piece. Wow. And he wants to know whether he can continue holding on to them for the long term as well as short term. So Mahesh, coming to you on Canara Bank, our viewer is sitting on a handsome profit of over 6 lakh rupees, bought at an attractive price of 17 rupees, Canara Bank. How does the fundamentals of this particular stock look like? And would you recommend Radhakrishna to book partial amount of profits at least?
We are optimistic for much more upside in a PSU banking sector. Recently, 2-3 days back, I also recommend Canara Bank on our shows. So I think investors should hold at least for a 3 to 6 month, where technical also will support supporting PSU banking. And today also we have seen some more kind of upside in PSU banking in all the PSU banking. If you're looking on SBI, PNB, Bank of Maharashtra, Union Bank, all the PSU banking sector has run slightly. So it's technically it should be we can see some more upside range in banking sector. From Canara Bank perspective, I think 125 first level could be watchable. After that, what we can see upside slowly and gradually up to 140 zone. So I'm optimistic for some more upside in a particular Canara Bank. If you are looking for a profit booking, then level could be nearby 125 level could be level where the investor should look for a profit booking. But yes, if you're longer term horizon, I think 135, 140 level could become easily.
Okay, understood. And Sundar, tossing this question to you as well, because I'm very curious to know how you are reading this chart, because I feel like I think our investor, our viewer who has bought these shares, bought them back in 2020, because that's when it was trading around 17 and it has climbed to an attractive level of about 115 now. My question to you is that, where fundamentally speaking, Mahesh did suggest that the stock could see a further upside. Would it, according to you, exceed the October 2024 levels, because that was its highest point?
Yes, so Malika, for this analysis, I am referring to weekly time frame analysis, and I could see that from, you say, mid-April, the stock has given a trend line breakout, which is around, you can say, steeper degree trend line, and it has given a sharp breakout. So I would suggest that this is the kind of good momentum to ride. And coming back to your question that will it cross its October high, then yes, I am pretty much confident that yes, this stock could, make its fresh high of 130 in coming few quarters. But if the viewer wants to book his profit, or if he wants to partially book his profit, then I would suggest him a trailing stop loss, which is to be placed at around 106 level, because where the recent lows are made. So other than this, I am positive on this stock, and it is better to hold this stock for coming few months.
Okay, thank you so much for that. Now we are joined by a caller from Tamil Nadu. Hi, Sunil.
Hello.
Yes, Sunil, please go ahead with the query.
Yeah, good evening. I have a query on the Reliance Power. I am a long-term investor.
Okay.
I am having 27,000 shares of Reliance Power at 45.
Okay.
And now it is trading around 60. So I want to know the technical and fundamental analysis of this stock.
Okay, and for how long are you planning to hold it?
I can hold as long as 5 years or more if it is.
Okay, and for how long have you been holding it?
For last 1 year.
So, so last 1 year you've been holding it, right? And you've made some significant profits of, almost you've reached 4 lakh rupees there. So kudos to you, Sunil. Yeah. And I'll get your query answered. Mahesh, talking about Reliance Power, firstly, what's your fundamental outlook on it? Because if I look at it, its competitors, so it's trading, the valuation seems pretty decent with respect to them. So, in that sense, the order book, how does it look like to you?
See, if you're looking on the fundamentals, their balance sheet is improving day by day, and on the other parameter, if you're looking from a my very micro level balance sheet, then I think much more decent balance sheet from earlier. So I think technically also stock is supporting price. I think some more upside could be coming near term also. So from my perspective, investor can hold from 6 to 9 months at least, where we can see that 70 level at least we can see from in Reliance Power prospect. But in shorter time period of time, we can see some consolidation because stock has recently run from 40 to 60 level, which today the stock has touched 60 plus level. So some consolidation can be seen in near term, but yes, from a 3 to 6 month average, at least 70-75 level could become in the Reliance Power.
Okay, so when the stock will be reaching those levels, Mahesh, do you suggest that our investor should actually book his profits also?
No, that time also watchable. I think stock had some more potential, but yes, if you're looking from a 3 to 6 months, I think that level could become easily. So I'm suggesting that 3 to 6 months, that level could become. After that, what we can review further for the same.
Understood. And Sundar, very quickly on the technical front of it, because he wants to accumulate more. So are these the correct levels to enter?
See, at a dip, I could say that it is a good level to accumulate at 53 or 55 level, but not at this price. And eventually, if you see the target for me, it is at 73 rupees. This stock look attractive to me, and the stop loss should be placed below 49 levels.
Understood. Got it. And now we're being joined by Vijay Srinivasan from Chennai. Hi, Mr. Srinivasan. Please go ahead with your question.
Yeah, good evening, madam.
Good evening.
I am holding a company called Force Motors.
Okay.
I purchased it 5 years ago at 1,900 rupees. I am holding 100 shares.
Okay.
Can I hold it? I wanted to hold it for a long term. I want to know the both fundamentals as well as the technical side and latest Q4 result details.
Understood. Got it. Mr. Mahesh, Vijay Srinivasan from Chennai currently holds 100 shares of Force Motors at 1,900 rupees a piece. The stock is trading around 12,650, and that gives Vijay Srinivasan a massive profit of about 10 lakh rupees via this investment. Although he wants to continue holding, he wants to know whether or not it performed well in Q4, and this is this company holds expertise in commercial vehicle segment. Go ahead and give us your fundamental analysis and also tell us whether Vijay Srinivasan should book his profits or not.
I think they can book at least 50% profit here. I'm tracking stock very closely from 400, 500 level. We have seen some good upside in this stock. Recently, we have seen some downside after that, but we have seen significant upside in a shorter time. So I think some partial profit booking is here can be a good rewardable. Yes, we can see some more upside, but yes, these level are good for profit booking. So investors should book at least 50% profit here, booking here. If you are looking for a longer term perspective, yes, you can hold further, but at least book 50% profit here.
Okay, thanks for that. Now let's go across to a caller joining us from Telangana. Hi, Raj. Good evening. Raj, am I audible?
Yeah, good evening, madam.
Yes, good evening. Please go ahead.
Madam, I'm planning to buy Tata Motors shares of quantity 300. My query is whether I should go for Tata Motors or Mahindra and Mahindra, because Tata Motors is available at attractive PE. So my query is from the perspective of fundamental and technical. I want.
Okay, but are you a long-term investor, Raj?
Yeah, I've been investing from 5 years, madam.
Okay. So Mahesh, quickly, if you could, pick between M&M or Tata Motors, because he wants to, hold 300 shares. So which counter do you suggest?
If you're looking for, from my perspective, my preferred is M&M always. But yes, Tata Motors P is attractively compared to other counter in this space. But Tata Motor has a many more hurdle and kind of businesses. So I think on this time of period, M&M is preferred. If any lower level, if you are getting nearby 2920, 2880, that could be attractively for M&M from this time of horizon. So yes, M&M can be preferred if you want to buy on the lower level. If anyone getting M&M can be bought, and upper side range from a 1 year perspective, I think 3,450, 3,500 level at least could come. And after that, where we can review further. From Tata Motor perspective, I think attractively be, but yes, some many kind of hurdle we are seeing. So from a time being perspective, I think Tata Motor should be wait and watch type of strategy.
Wait and watch on Tata Motors, and now we're being joined by Raju from Mysuru. Hi, Raju. Good evening.
Hi, ma'am.
Please go ahead with your question.
Ma'am, KPI Green Energy 1000 stock average price 600 rupees in world in 6 months in the world, ma'am. And profit loss, ma'am, in a seller road in technical analysis, ma'am.
Sure, sure. Sundar, our viewer Raju from Mysuru currently holds 1,000 shares of KPI Green Energy at 600 rupees a piece. The stock has dropped down to 488 odd levels. Would you recommend him to continue holding his shares or rather also accumulate at these levels?
Yeah, Malika, I would rather say him to accumulate more. Now, I'll tell you the reason why. So, first of all, if you see the stock has given a strong breakout from on 19th May, and the range was from 450 level to 350 level. And apart from this, if you see, there is a kind of 200-day moving average support which has holding the price very strongly. So, I'm positive on the stock, and I'm expecting a target till around 580 level, which is the recent resistance, or you can say the major resistance which is currently placed at. And other than this, one positive point about this stock is that the stock is spending time near its 200-day moving average, and it is not falling much. So this is one of the parameters which I see to judge the stock.
Understood. Thanks for that view. Quickly, let's go across to a caller joining us from Karnataka. Hi, Mohan. Good evening. Mohan, are you there on the phone line? I think we've lost the line there, but we have Mohan's query with us. So he holds 14,000 shares of Yes Bank at 20 rupee a piece. He's sitting on a profit of almost 21,000. So Mahesh, although he hasn't mentioned the time horizon, I'd quickly take your fundamental view on the counter. We know that, SMBC, which is a Japanese financial conglomerate, so that is to buy 20% stake in the bank. So considering these good news for the bank, how do you view it fundamentally?
I think we are not going much more because equity of Yes Bank is too large. I think the 24 level where investors should book at least partial profit booking on that level. After that, but if a stock is moving and closing about 24, 25 level, then we can see up to 28, 30 zone. From current perspective on 24, if any 24 level coming, then investors should book profit on that level.
Okay, all right. And now we're being joined by Ravi from Bengaluru. Hi, Ravi. Good evening.
Good evening. Good evening.
Please go ahead.
I have Bajaj Auto 100 shares.
Okay.
At an average price of 3,300.
Understood.
The share shot up to 12,000 or something, and then subsequently it started dropping.
That's right.
Should I book some profit? Because I have been holding this stock from COVID time. I bought during COVID time. So maybe 3-4 years back. So I want the experts' advice whether I should book profit or hold on to this being an excellent company.
Sure, sure. Mahesh, Ravi from Bengaluru currently holds 100 shares of Bajaj Auto at 3,300 rupees a piece. The stock has climbed to about 8,599 odd levels, the level at which it is currently trading. Now, although it was down about 3% in trade today, our viewer is sitting on a very good profit of over 5 lakh rupees, if I'm not wrong. And also, when NDTV Profit interviewed the management of Bajaj Auto, they said that they're trying to firstly strike a balance between ICE and EVs at the moment, and that's how they're trying to also aid profitability and grow their EBITDA. From these fundamental levers playing in for the company, do you think it's okay to continue holding and wait for Bajaj Auto's share price to exceed 12,000 levels?
See, from Bajaj Auto perspective, I think numbers are not much more encouraging for holding the stock for a shorter term period. But if you're looking for a longer term horizon, KTM, they recently acquired. I think that that acquisition could give them a further their balance sheet strengthen. So I think if your horizon is more than 1 year or a 1 year, I think some more upside could be come. But don't expect much more upside that could be come in that Bajaj Auto. From shorter term period, I think some lower consolidation could be there. But yes, if your horizon is 1 year and more than 1 year, you can hold for at least 10,500 level could become.
Okay, so a lot of callers are lined up. Now we'll go across to Pradeep joining us from Bengaluru. Hi Pradeep, good evening. Pradeep, are you there on the phone line? I request our viewers to actually turn down their television volumes. We are not able to hear them, and we really feel bad then, when they are there on the line, but we are unable to speak to them. But all right, we have his query with us. He holds 50 shares of Salza Electronics at 340 apiece. He's looking for a long-term view on the counter. Mahesh currently is trading at 929, and he has made some good profits there of 30,000. So, what do you have to say? How is it positioned with compared to its peers? What's your outlook?
I think stock is good. He can hold further. Management also guided some good strategy for the stocks. I'm tracking stock from a lower level, very low, I think 165 level. Stock pattern and stock nature of trading is very different from other stocks. So I think some lower consolidation could become in stocks for a time being. But yes, if you're looking for a 1 year or more than 1 year horizon, I think a stock has potential up to 1150 level. So if your horizon very shorter term period, you can book on higher profit book on higher level that could be 950, 960 range. But if you're looking for a more than 1 year or a 1 year horizon, then you can set target 1150 level.
Okay, all right. Thank you so much for that, Mahesh. And now we're being joined by Amal from Kerala. Hi, Amal. Good evening.
Good evening, ma'am.
What's your question today?
My question about Sonata Software.
Okay.
I want to know about both fundamentally and technical view.
Sure.
I have studied it's a fundamental okay to me, good for me.
Okay.
So is that why the stock price is behind, I think?
Okay, let's decode that. Sundar, coming to you on Sonata Software, the stock is now trading around 408 odd levels, and it was down about it was up about 1% in trade today, but in the last couple of months it has seen a bit of cuts. And my question to you is that given how it is trading at the levels at which it is currently trading, how long do you think it will take for it to go back to its 52-week high? And from that perspective, is it the right time to enter?
So, Malika, it is difficult to say that at what time frame it could reach its 52-week high. But currently, if you see, the stock is trying to gain some positive momentum, and the 20-day moving average is acting as a support level to watch out. But if you see the 495 exact level, the stock has faced a kind of resistance from there itself, and I could see that the limited is capped at that price only. And if the stock price crosses above this level, then only then we could see some kind of uptick from this stock, and the stock could dash till 700 level. Apart from this, if you see at current level, this is not a good price to add. If the viewer wants to add the stock, then I would recommend him to add at the fresh record, that is at around 495 levels.
Okay, thanks for that. Let's go across to a caller joining us from Hyderabad. Hi, Ram. Good evening.
Hi, good evening.
Yes, please go ahead with the query.
I have 100 Chambal fertilizer shares on average price of 600 rupees.
Okay.
Actually, I brought from short term 1 month back.
Yeah.
So, should I average or should I exit? Should I hold?
Okay. So, Sundar, without wasting much time, I'd like to take your technical view on the counter. Currently, it's trading at 551 and was also down in trade today, almost nearly 6%. So, after hitting a high at 726, I can see that the stock is moving in its downward trend now. So, what suggestion do you have for our caller, Ram?
So I would suggest him to wait till 1 to 2 days and see what action this stock is doing. Because if you see, the stock itself is on its support, that is at 550 level, and apart from this, if you see technically, the 200-day moving average is placed at 541 level, which will act as an important support level to watch out. So if these levels are holded, then the viewer could add, or he could accumulate more. And if you talk about the technical indicator, which is RSI, the RSI is currently at its oversold zone. The 14-period RSI, it is currently at 25 level. So I think so that the 200 level on Monday or Tuesday could be hold it out, and from there itself the stock could reverse. I mean, at currently the stock hasn't given a sign of reversal, but I'm pretty much sure that from Monday to Tuesday, or maybe last plus Wednesday, we could get some more clarity about this stock, that what action could be taken. But other than this, as of now, I would suggest him to avoid this stock, wait till Monday, Tuesday.
Okay, so avoid jumble fertilizers and wait until Monday or Tuesday is the advice of our technical expert. Now we're being joined by Devashish from West Bengal. Hi Devashish, good evening.
Yeah, hi ma'am. Hi sir, I have 100 shares of PG Electroplast at 837 rupees. I have a long-term view. I can hold for more than 1 year from here. So what should I be doing with it? Because I'm having a good loss.
Understood. Got it. Mahesh, Devashish from West Bengal currently holds 100 shares of PG Electroplast at 837 rupees a piece. And since the time he bought these shares, he has incurred a loss of about 6,000. The stock is trading at 771 and was flat in trade today. In fact, has been flat throughout the week. Plus, a lot of block deals have been steaming some interest in this particular stock. What do you think about this multi-bagger stock, and do you think it's going to be able to repeat that kind of fortune it has had?
I think yes, stock has a potential for some upside, but if you're looking for stock, we have seen lower consolidation type of scenario in this stock. So I would recommend if any downside nearby 620, 640 zone, if any downside coming on that level, investors should average at least from that perspective. So after that word, we can see some more upward side 840, 850 range. So I think it's a good for a hold from a longer term perspective. But yes, if you are getting nearby 620, 640 range, then you can add further.
All right. With that, let's go across to a caller joining us from Bengaluru. Hi, Raghavendra. Good evening. Raghavendra, are you there? Okay, hard luck. We've lost his line, but we have his query. He's asking whether it's the right time to enter ICICI Bank at the current levels. Currently, it's trading at 1446. With this, I think Sundar will be able to help us more. Sundar, are these the correct levels to enter the bank for somebody who wants to invest in this counter?
No, Himakshi, if you see on daily time frame, the stock is creating a rising wedge pattern and it is a bearish pattern after a sharp uptrend. So I don't think so that this is a good price to add. The good price to add is at around 1360 where the 50 where the important support level lies, but not at this price. Because if you see if the price goes below 430 in coming few days, then I would not be surprised that there could be some fresh sharp cut from this kind of counters. So I would rather suggest him to accumulate at 1360 level, but not at this price.
Okay, understood. Not at this price for ICICI Bank. And Amlan is joining us from Odisha. Hi, Amlan. Good evening.
Good evening, ma'am. My question to you is, I have purchased NBCC in March at a very attractive price of 83.9. I bought around 800 shares because its ratio was very attractive and had a very strong order book. So I want to look at the stock for a long-term perspective. What is the outlook, ma'am, for next 3 to 4 years?
Sure, let's get to know that. Mahesh, Amlan from Odisha currently holds 800 shares of NBCC at 83 rupees a piece. He bought them a couple of months back. The stock is trading around 123. In fact, it has been reacting positively towards Q4 results, where operational efficiency as well as net profit also grew. I'd like to know what is your outlook for the stock, given it sits on an attractive order book as well.
Firstly, they can hold for a longer term period because it's I think attractive valued in particular space. In modeling, so I also suggested nearby 114, 115 range and BCC for buying range. Today itself just 126 plus level. I think from shorter term perspective, 128, 140 level could be a come in near term as per technical. But yes, if you're looking for a longer term period, 2 to 3 year horizon, definitely you can hold further. From a 1 year perspective, I think 160, 175 range could come in these stocks. But yes, from a 2 to 3 year horizon, we have to watch quarter on quarter results and updates for the company. But overall, we are positive on the stocks.
Okay, now quickly, let's go across to a caller joining us from Andhra Pradesh. Hi, Mr. Sharma. Good evening. Mr. Sharma, are you there on the phone line?
Yes.
Yes, please go ahead with the query.
Okay. Hello?
Yes, please go ahead, Mr. Sharma. We can hear you.
Okay. I'm holding 1,000 shares of that Dr. Delia.
Yeah.
It was average price was 100 rupees.
Okay.
Since long back, I'm 20 years ago, I have brought this.
Okay.
I'm holding 1,000. Whether still I have to hold it or I have to dispose?
All right. So, Mahesh, he's sitting on a significant profit of almost 11.5 lakh rupees there. So, what should he be doing with the counter? Should he be booking his profits at these levels, or do you suggest him to hold it for another 1 year?
I think they should at least book profit in 50-60% on these levels. From result perspective, if you're looking, I'm not looking, not very much impressed from the results. Apart from acquisition, they are not doing good in the domestic as well as other countries. So from that perspective, not much more perspective for a upper side in Dr. Reddy. So I think profit booking is advisable on these level. At least 50% profit they can book on these level.
And that note, Mr. Mahesh Amuja and Sundar Kevar, thank you so much for joining us this evening and answering all the questions of our viewers with such patience. And viewers, you stay tuned to NDTV Profit and continue to send in your queries on both WhatsApp as well as call in live. We're live with Ask Profit in the morning as well as in the evening. We will see you again on Ask Profit again next week, but do stay tuned to the channel as we have a lot more lined up for you right on the other side.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
India's fourth quarter GDP growth beats estimates at 7.4%. The GDP-GVA gap widens with GVA rising to 6.8%, while agriculture records the highest sectoral growth. Manufacturing and services slow down. Pickup in growth momentum from the fourth quarter will sustain moving into FY26, says CEA Anantha Nageswaran. He expects both manufacturing and services are firmly in expansionary zone. Nifty and Sensex decline end the week lower, with Nifty Metal losing the most. Mid and small cap indices outperform the benchmarks. Nifty, FMCG, oil and gas, auto, IT fall for the second week in a row. Adani Ports raises 5,000 crore rupees via the issue of 15-year non-convertible debentures from LIC. Adani Ports will use the proceeds for bond buybacks. Government asks RBI to delay gold loan norms till January 2026. Department of Financial Services makes suggestions. Exclusion of borrowers of up to 2 lakh rupees from the rules. Finance Ministry cracks the whip on MTNL, asks for a time-bound monetization plan. Sources say around 50 assets have been identified across the country. Hello and welcome. A very good evening, viewers. This is Profit 360 on NDTV Profit, and I'm your host, Malika Mishra. Along the next half an hour, I will be I'll be giving you all your latest updates on markets as well as national and international news. To begin with, India's economy grew by 7.4% in the March quarter, marking the strongest quarterly performance in FY24. This is a sharp rise from the revised 6.4% growth seen in the October-December period, and gross value added, which excludes taxes and subsidies, also saw an improvement, rising 6.8% compared to 6.5% in the previous quarter. My colleague Pallavi Nahata is now joining us to give us more details on the same.
Right, India's economic activity continued to show signs of improvement, with Q4 GDP coming in at a four-quarter high at 7.4% GDP growth, and that's according to the latest estimates released by the government. This is compared to a revised estimate of 6.4% in the October-December quarter, and GVA, however, which excludes indirect taxes and subsidies, actually rose at 6.8% during the fourth quarter compared to the estimate of 6.5% in the preceding quarter. Now, for the full year, GDP is estimated to have grown by 6.5%, which is the same as compared to the second advance estimates. It is still, however, the lowest in 4 years. Let's also take a quick look at some of the industry-wise trends. While growth in agriculture as well as services continued to remain fairly strong and resilient, with construction in fact showing double-digit growth, manufacturing continued to underwhelm, though that wasn't entirely unexpected. In terms of expenditure-wise trends, personal consumption did show a little bit of a slowdown, while investment demand powered growth. Government consumption expenditure surprisingly showed a contraction in the January-March quarter. Now, CEA Anantha Nageswaran said that the economic activity momentum looks like it has been carried on in the ongoing fiscal year as well, and the government has pegged GDP growth to range anywhere between 6.3 to 6.8% for FY26.
We retain our growth outlook as something between 6.3 and 6.8%. Private consumption, especially the rural rebound and resilient services sector exports and steady capital formation as key growth drivers. Of course, international agencies are adjusting their growth numbers depending on global developments and domestic developments, and those the range is very similar to the kind of range that we have. We are now 2 months into the new financial year. Actually, what is interesting to note is that both manufacturing and services, the purchasing managers indices on your top left, they are firmly in the expansionary zone. Then you look at the e-way bill generation, picked up year-on-year growth rate, actually improved to 23.4% compared to 20.2% in the previous month. And then on the bottom, you look at the average hotel occupancy rate in April was slightly better than March 2025. And then if you look at the port cargo activity, again, was much better than what it was in April 2024 and in April 2022. And growth in air cargo is 11.5% compared to 10% 1 year ago. So, or even for that matter, minus 4.5% in April 2023. So clearly, the momentum of the economy, which picked up in the fourth quarter, is continuing into the first quarter, and that's a good sign.
And according to data from the Comptroller General of Accounts, India's fiscal deficit for FY25 came in at 4.8% of GDP, matching the government's revised estimate. The deficit stood at 15.77 lakh crore, slightly above the full year target. Government spending touched 46.56 lakh crore, while revenue came in at 30.36 lakh crore, with both tax and non-tax collections falling a bit short compared to last year's performance. Market started the June series on a weak note as the benchmarks ended lower. Auto, metal and IT stocks weighed the most on sentiment, dragging indices lower. Most sectoral indices, except for PSU banks, closed on a negative note. My colleague Harsh Sayata joins in with a detailed roundup of the market today.
Well, indices today slightly on a muted note, especially on the Nifty 50 index. We're down around 1/3% thereabouts. We've closed around the 24,750 mark. Some amount of resistance is what we're told around the 24,700. But in terms of the breadth as well on the Nifty, it was extremely weak. You saw pretty much large baskets of stocks in the red. PSU banking index was one which was in the green and well in the green. Led by an SBI, which did fairly well in trade. And Eternal within that Nifty 50 basket also did fairly well for itself. Likely passive flows aiding that particular counter as well. HDFC Bank was the other heavyweight which did well, around 40 odd points, contributed out of the 60 positive contributors on the index by just SBI and HDFC Bank. So likely if those didn't, you would well see a deeper gash on the index. So it was the Bank Nifty and the Nifty PSU Bank especially, along with an HDFC, which has helped the index down just about 1/3%. For the week gone by as well, we were we closed lower, at least on the Nifty 50 index. There was some bit of outperformance in the broader markets that we saw for the week gone by. The Nifty mid cap and small cap index outperformed for the week as well as for today. We saw the Nifty small cap especially have plenty of legs and see a bit of an uptake. In fact, the breadth overall was also slightly muted, nearly 1:1, but in favor of the losers in trade, at least today on the NSE. Let's talk about sectors now. The PSU banking index, I did speak about that, a top sectoral gainer, 2.6% higher. Outside of that, we saw only about muted to negative moves. The auto index, the pharma index saw some bit of pressure through the day. The metal index was the top sectoral loser as well, 1.7% lower. So that was the one pocket which was hurting today. Last off, BSE 500 top gainers, top losers. Now as we inch towards the fag end of the earnings season, some movers yet on the back of numbers, but we're at the fag end now. So likely that will not be the case starting Monday in a significant fashion, and therefore some big movers nonetheless today. Something like a Mazgon Dock sitting in the red was a large mover on the back of disappointing earnings, something we'll have to look for in terms of commentary as well.
Right, Harsh, thank you so much for wrapping the market today for us. And despite a lackluster quarter, viewers, Bajaj Auto reported a record-setting fiscal yesterday. Earlier today, we spoke to Rakesh Sharma, ED of Bajaj Auto, to gauge his views on the company's performance. During our conversation, he also shared his optimism regarding the steady growth of the company's electric vehicle business. Let's take a look.
We feel, first of all, EVs and ICE have to be independently pursued, and we have to pursue them as per the opportunity there and as per the requirements of that particular segment. But yes, when I look at EVs in particular, in three-wheelers and in Chetak, our ambition is to be at the leadership position. The margin profile is also constantly improving. We were negative in FY24, but by Q4 of FY25, our EV business, which comprises both three-wheeler, e-auto and Chetak, which is the e-scooter, put together is already in the green. So there is a recovery, and of course it is less than the the best-in-class margins we have. But then there is an opportunity to grow. And if I just want to remind you that with EVs, we are not substituting any of our existing business.
Right. While that was Rakesh Sharma's view on the EV segment of Bajaj Auto, LIC has fully subscribed to Adani Ports and Special Economic Zones 5,000 crore bond issue. Now this, viewers, marks the company's largest ever rupee denominated bond sale and is also Adani Ports' first 15-year bond sale. My colleague Anushi Vakharia is joining us with more details on the same.
LIC has entirely subscribed to the 5,000 crore of bond issue of Adani Ports. Is what we are seeing now. They have subscribed to this 5,000 crore of this 15-year bond issue which is there, and this is at a rate of 7.75% of the rate that we are looking at. Again, in a privately negotiated deal is what we are seeing. This again marks company's largest ever rupee denominated bond issue, and it's also first 15-year bond sale as well in terms of where the long tenure is concerned. Now, where Adani Ports will be utilizing these funds for, firstly towards debt obligation, so to repay some of those debt is what we are looking, and also towards working capital side or for capex side, the company will be utilizing this proceeds, so that we should be taking an account for. Other than that, if we look at the credit ratings also in the recent times, now CRISIL has maintained a AAA rating for its bank loan facilities and NCDs. Along with that, for commercial papers, it has maintained a A1 plus rating. While if you look at Fitch ratings, they've affirmed a BBB minus for long-term foreign currency issuer default rating, and also alongside have removed their rating watch from negative for Adani Ports. So overall a positive. We are seeing an LIC subscribing to the entire 5,000 crore of bond issue is the main focus point for Adani Ports today.
Right, thank you so much for that, Anushi. And now, facing mounting financial stress, the Finance Ministry has now asked MTNL to take concrete steps to address its growing debt burden. Now, with no fresh capital infusion on the table, the focus has shifted to asset monetization as a primary route to manage its liabilities. And I'm now being joined by Shrimi to explain us the story.
With rising bank defaults and continued financial strain, MTNL has been asked to outline a clear roadmap of its asset monetization plan in a time-bound manner. The move comes after DoT's recent proposal of capital infusion into this debt-laden telecom, which was declined by Finance Ministry. Finance Ministry is apparently not happy with the roadmap which was presented by MTNL on the asset monetization plan. Now, under this monetization exercise, which is progressing well, is what sources telling us, identified and have been earmarked around 50 such assets across the country, which also include BSNL surplus non-core asset, and the valuation of those is already underway. In fact, some of the valuers have been impaneled, and a blueprint of those valuation will be soon on the government table, which will decide further course of action. In fact, National Land Monetization Corporation, which is a nodal authority, is assisting MTNL throughout the process. They are in talks and discussion with state and local authorities, understanding their issues, and they're helping in clearance of all sort of regulatory approval which is required to monetize potential asset. Now, if you remember, the total, dues towards lender is about 8,500 crore. The total liability, if you talk about, is around 33,000 crore, and which also goes towards and include 24,000 odd crore of government bond. Now, DoT already loaned around 1,100 crore to service their interest on those government bonds. Now, the whole idea of this monetization exercise, particularly in state-run enterprises, which has been facing financial strain, to adopt proactive measure in order to manage the financial health better. In MTNL case, particularly, the government is quite firm to not let lenders, take any haircut, and in fact, any kind of fiscal support is completely ruled out, at least for now.
Right, thanks for that, Shrimi. And now the government has stepped up its action against Turkey. It has told Indigo that the carrier's lease with Turkish Airlines must end. For context, Indigo operates 2 leased Turkish Boeing 777 aircraft and wanted a 6-month permit extension, but the government has only agreed to one final 3-month extension. My colleague Sessa, who is closely tracking the story, is now joining us on the phone line to explain. Sessa, could you explain what does this mean for Indigo?
Right. So what we know so far is that the DGCA has given one
one time, which is the last and final time, a 3-month extension to Indigo for the 2 wide-body Boeing 777s. It has wet leased from Turkish Airlines. Now, the airline can use them till August 31st instead of November 30, as it had, applied for. The DGCA gave this final extension in order to avoid any passenger inconvenience due to immediate flight disruption, after getting an undertaking from the airline that they will terminate the damp lease with Turkish Airlines within this extension period and not seek further extension for these operations. Now, Indigo's management had earlier said that they have been planning a contingency plan in place. So that there are no major disruptions. But of course, this is likely to be a major hurdle for Indigo, and we need to wait and watch and see how they kind of manage their operations. They are likely to use their existing aircraft to cater to these destinations. But again, we need to wait and watch and see how they do it in order to avoid any such major disruptions.
Right, Tessa. As you said, that it would be interesting to see how Indigo really faces this very important hurdle. Now, moving on, viewers, India is ramping up AI infrastructure with 15,000 more GPUs, taking total capacity to nearly 34,000 under the India AI mission. At the Make AI Work for India event, IT Minister Ashwini Vaishnav said 7 firms, including SIFI and Yota, will supply GPUs from NVIDIA, AMD and Intel. He added that India's AI push could help bring global talent back home.
16,000 GPUs का आज यहाँ पर एम्पैनलमेंट डिक्लेयर हुआ है. बहुत अच्छी बात है. मिला के 34,000 GPUs. 34,000 GPUs अपने आप में it's a very big, large, significantly large number of compute. And this is a continuous process. The third round will also be very soon completed. That will bring another round of GPUs. In a sense, what we were some time back worried about whether India will be able to get that kind of compute facility or not. It was a big worry in the minds of many policymakers. There was a AI diffusion rule. We were all worried about that. But now practically those worries are over. With 34,000 GPUs, the compute facility is very significant, and we can utilize it to develop our AI ecosystem in a very significantly good way.
Right. And at the Confederation of Indian Industry Annual Business Summit 2025, Minister of Petroleum and Natural Gas, Hardeep Singh Puri, reaffirmed India's commitment to the energy transition, highlighting reductions in diesel and petrol prices, while also emphasizing that LPG losses are under recovery and that OMCs will be compensated for their losses soon. Let's listen in for more.
Twice we reduced the cess in November 21 and May 2022, and state governments, I should have said, also reduced their VAT, and that's why we were able to reduce the price of petrol and diesel respectively by 13 rupees and 16 rupees a litre between those two reductions. Then once more later on there was a reduction. So point I was making was that India is the only country in the world where over a 3-year period, the price of petrol and diesel at the bunk, at the retail point, has actually come down. The LPG losses, the under recovery, they call it under recovery. But I think first time they had a under recovery of 28,000 crores, and we compensated them 22,000 crores. This time, from last year, they have a under recovery of 40,000 crores, and we have every intention of compensating them for that.
In a substantial relief for Larsen & Toubro in the Mumbai Metro case, the Mumbai Metropolitan Region Development Authority, or also referred to as MMRDA, has decided to scrap the 14,000 crore rupee tender process in which it had disqualified the firm. My colleague Charu is joining us to bring us more important details from the story.
The MMRDA has scrapped a 14,000 crore tender process that disqualified L&T in an infrastructure project related to Gaimukh Chowpatty and Bhayandar Tunnel. Now what happened here was that L&T had gone up to the Bombay High Court saying that they were disqualified from the tender process without even being told about it or being given a reason for their disqualification. They said that even their bid or the amount or their proposal was not really opened. What happened here was that they were disqualified for not being able to submit an affidavit on time. They then went to the Supreme Court when they could not get any remedy from the Bombay High Court. The Supreme Court proceedings were held in such a way that the MMRDA decided to cancel its entire tender process and has mentioned even in a media statement as well that they are going to open up for rebidding for the entire project in furtherance of public good, and it is likely to be the case that rebidding process is going to start where all the current processes around the bidding of the project stand cancelled and scrapped.
Right. And now viewers, giving you an interesting story. India's most expensive real estate deal has just been struck in Mumbai. 2 apartments bought at 2.8 lakh rupees for every square foot. Where is this apartment? What makes it special? And who is the buyer? And of course, is the property worth the money? My colleague Agnidev brings you a special report.
This is Glycomet and this is EcoSprint. 2 tablets that are used by lakhs of Indians every day for their diabetes and heart conditions. And the woman behind these brands has just bought India's most expensive apartments for a whopping 600 crore rupees.
This is Naman Jana. Rising 150 meters above Worli Sea Face, this 40-story ultra-luxury high-rise is being built by the Sri Naman Group. Jana features residences with around 6,500 square feet of area, column-free layouts, and has 11 levels of parking. It sits right on the entry point to the Bandra-Worli Sea Link and occupies a corner plot, plots which are usually highly desirable among home buyers. Now Leela Tiwari, the name behind pharma brand USV, has bought 2 sea-facing duplex apartments in this building for a total of 639 crore rupees. The apartments, with a total area of 22,500 square feet, span from the 32nd to the 35th floor, which means that Tiwari has paid nearly 3 lakh rupees for every square foot of her new home. This, however, shouldn't come as much of a surprise, since Tiwari is one of India's richest persons, and Forbes estimates her net worth to be over 33,000 crore rupees. But what this raises questions on is how high can the demand for these ultra-luxury properties can actually go to. And to understand more on this, we caught up with real estate expert Vishal Bhargav. So thank you so much for joining us. So number one, again, how high can demand for these properties go that prices are at such skyrocketing level, and which areas in Mumbai do you see such transactions taking place in the future?
Okay. So firstly, I think I must point out that this is a transaction that has stunned almost every observer within the real estate market. There are 3 or 4 things that really make a luxury project in Mumbai. First is if it's sea-facing. So this is a sea-facing project, bang at Worli Sea Face. Number 2, this is a project that doesn't have too many units. It's not a very dense project, just 16 apartments, so very limited concentration. But the third one, if you ask me what is really its biggest USP, is that this is a non-redevelopment project. This is one of the, I think, just 3